Raises its gains. And EasyJet posts a loss for the year. CEO Johan Lundgren tells Bloomberg he sees some European carriers exiting the market. Good morning, everybody. So the European equity session then for this Tuesday morning, just a minute or so, less than a minute away. And in terms of the futures, we were expecting to see a negative start to the European trading session. Concern really about the ongoing fight against the virus. Yes, we've seen vaccinations drive optimism in markets, drive rotations, drive risk rallies in markets, but still we have underlying concerns around just how bad things get for the winter. How much are we able to look through that? We'll see. In terms of the European equity market space, then this is how much we open to the downside right now. The FTSE 100 down around 0.2%. Some earlier optimism in the pound has been unwound. 130, 132 is where we trade right now, fairly flat. So that not much of a game changer for where we are on FTSE 100. Trading right now, but the FTSE is down by 0.3%. That's the early mover on these markets. The IBEX also down just 0.1%. That's interesting in itself, given the large moves in Spanish banks we saw yesterday, the large moves in the IBEX that we saw this time yesterday. The CAC and the DAX making very modest moves to the downside, down just hundredths of a percent. European equity markets then opening modestly lower. That's after the S&P 500 closed at a record high following the news about Moderna's vaccine. Joining us now is Grace Peters, JP Morgan Private Bank Head of European Equity Strategy. Grace, really good to speak to you. I wonder if you could give us the context or the size and scope of the significance of the vaccine news we've had over the last couple of weeks from Pfizer, BioNTech, and now from Moderna as well. Is this something that prompts a wholehearted rethink of your exposure on European equity, or is it just tweaking at the edges? What is the size and scope of this for you?
So we think that we're in a recovery phase across global equity markets. Global equities will move higher over the next 12 months. But as they go up, you will see this broadening out of leadership. Leadership thus far has been extremely concentrated around growth equities. And we do think there's room for more cyclicals to also participate in the rally. And this is something we've been saying for a few months, actually. We've been advising that clients balance portfolio, adding cyclicality to complement areas of structural growth, and news around the vaccine and indeed greater clarity post the US election also just lend itself to the idea of a bridge to more normal economic growth, economic recovery, slightly higher bond yields that also help equities and help this more cyclical rotation. But we don't think it's about, cutting growth altogether. Growth and technology around digital transformation is still a key part of our conviction. But it is an acknowledgement that COVID has changed the investment landscape. There are new areas of growth that you can invest in, particularly those with an environmental tilt. And there's also parts of the economy that have been very heavily impacted by mobility restrictions that we've seen and may still be upcoming in some regions as well. And some of those parts of the market do look oversold when you start to bridge towards normality.
What is the relationship, Grace, that you see between value and the 10-year yield? Of course, a lot of people point to rising bond yields as something that lifts banks' profits, and therefore value stocks tend to move in conjunction. I know that you've been looking at some charts recently that show value versus momentum and how that is indeed driven by 10-year treasuries.
There's a very strong correlation between bond yields and value equities. And you mentioned, Anna, financials, energy, also autos, mining, construction. There's a whole group of equities that tend to move very tightly with US 10-year yields. We expect bond yields to move up. Our target is 1 to 1.25% over the next 12 months for US Treasury yields. And therefore, that will help this more cyclical rotation. But I think it's not as simple as just looking at historic correlations and extrapolating that going forward. In the world post the pandemic, there have been seismic changes and some sectors simply won't fully recover, even when we have a vaccine and that is mass distributed. So I think one has to be a little bit selective when picking the cyclicals or the value equities that one wants to re-enter. We like cyclicals that have also got some structural tilt. I mentioned environmental trends. We think the energy transition's had a huge boost from the COVID pandemic and also from various government commitments that have been made over the past 6 months. And when you use that as a pillar for making investment decisions, you can actually get really nice cyclical exposures through capital goods, through some semiconductors, utility companies, as well as construction. So we'd certainly be watching 10-year government yields, but we don't think that's just the be-all or end-all when it comes to choosing which parts of the market to rotate into.
And so, Grace, which are the parts of the market that you think will not fully recover then? Because a lot of people talk about, travel and leisure and tourism and all of those things as being obviously depressed at this point. But do you think they don't recover? Is it a subsector of that won't recover? Or is it retail? Where are you focused on sectors that won't rebound?
I think, I've mentioned the energy transition, and therefore the flip side of that is energy equities, the oil equities would be an area of the market that we think, still has quite secular challenges to it. Will the oil price recover as, a vaccine is distributed? We expect yes. Will energy equities therefore rally off the back of that recovery in the oil price? Yes. But when we look around at the longer term picture, the fact that the energy transition, the shift away from fossil fuels towards renewable energy just makes economic sense. And you're seeing governments from China, Japan, the UK, obviously Europe with the EU Green Deal announced a few months ago, and potentially now the US under President-elect Biden, all pushing to accelerate the energy transition, then we do have a degree of caution when it comes to some of the oil equities, because they need to invest to make their businesses future-proof, and they need to balance that capex spending with the need to manage cash flows and pay investors a dividend as well. So that would be one area that we would certainly focus on. And as you say, Anna, airlines also, again, linked to the energy transition, the fact that they need to decarbonize themselves, as well as perhaps some structural changes around businesses having set employees up to work from home and made that investment and made it part of their resilience planning. There's little pockets that we must consider when we're thinking about what normalized earnings look like.
Okay, and do you expect to see market volatility decline or increase from here, Grace? With some of the vaccine news, we see volatility perhaps of a positive nature, at least markets going higher in a hurry on some of the vaccine news flow. What are you expecting from volatility? And if we see dips, is that a good opportunity to buy here?
Yes, I think volatility will feature because as we're seeing, again this morning, you've had some more positive vaccine news, but still the market looks ahead to lockdowns in Europe that are obviously happening now, and potential lockdowns in the US and other parts of the world that undoubtedly could impact near-term economic growth, because of course the vaccine doesn't really do an awful lot for the next quarter's worth of corporate profits, even if it does give us more confidence looking later down the line. So volatility is likely to still feature. We would be using those periods of volatility to add some of these cyclical equities that we've spoken about, but also not forget the growth component and the technology component. If one sees a drawdown in technology stocks, which we saw going into the US election, and obviously we've seen a rebound since, but we still think that technology is going to deliver some of the best growth over the next decade when it comes to equity earnings. earnings. And obviously, whilst we're talking about a rise in US Treasury yields, it's still off a low base and to ultimately a low number in a historic context, around 1.25%. So the backdrop still remains low growth, low inflation, low rates, which supports these longer dated growth equities, because growth is ultimately still scarce when it comes to investments across multiple asset classes.
Grace, thanks very much. Stay with us. Grace Peters, JP Morgan Private Bank Head of European Equity. We'll get further thoughts on strategy next. We'll get to Grace's thoughts on which sectors to indulge in right now and which to avoid. We're just getting some lines coming through from the German Chancellor Angela Merkel saying the pandemic situation remains very serious. The pandemic measures are among the toughest decisions in her time, she says. Virus numbers are too high. Contacts must be reduced. This in the context of the difficulty she's had in extending some of the more recent lockdown measures. More from Grace in just a moment. This is Bloomberg.
shouldn't accept or assume that it's all going to be bad without working to make it better. We got to try to, we got to give the new administration a chance to articulate an approach and then try to achieve, in cooperation with Europe and the United States and the international bodies.
That was Bill Clinton, former US president, speaking to Bloomberg at the New Economy Forum. Now, EasyJet has reported its first ever annual loss amid the pandemic, but CEO Johan Lundgren told me the prospect of a vaccine has already boosted consumer confidence in the airline industry.
The announcement of the vaccine, the news of that, we saw an increase in bookings quite significantly. So it shows that the underlying demand is really, really there. And hopefully we can see a strong recovery coming very soon.
Grace Peters, JP Morgan Private Bank Head of European Equity Strategy, is still with us. And it's interesting because I asked Johan there, Grace, about whether he thought that the aviation sector and perhaps the leisure part of it, the low-cost part of it, might be structurally smaller on the other side of this pandemic, and he didn't seem to think so. He thought underlying demand was really strong and that it would bounce back to 2019 levels. Let's talk about some of the sectors that maybe are challenged by the energy transition. Do you see the future of aviation in the same way as the CEO of EasyJet there, Grace, or do you have a slightly different view?
I think that there's obviously pent-up demand on the consumer and the business side, but I also see that when we think specifically about the energy transition, the airlines industry, when it comes to the European Economic Area, contributes about 4% to greenhouse gas emission. And obviously, we're seeing huge seismic shifts when it comes to attitudes towards climate change, the energy transition. A lot of that is driven by the fact that renewable energy just makes economic sense. Over the last decade, the cost of wind and solar generation has come down materially, some 80% fall in the cost of electricity generated renewably. And now in many regions, renewable energy is actually cheaper than energy generated by fossil fuels. So when you get to the point that it just makes economic sense, you're now seeing governments come in and really accelerate that drive. The EU Green Deal really led on that front. But it's not just Europe. When we look at China's recent commitment, Japan, the UK, all moving in the same direction. And perhaps Biden re-entering the Paris Agreement is something that he's focused. So again, a real pivot in the US towards clean energy and climate change, then that is incredibly powerful. So for sectors like the airlines, but across the board, actually, investors need to be looking at carbon emissions and the potential for, whether it be through higher taxes or other ways it impacts the cost of debt, for that to impact all sectors of the market.
And when we look at the winners from the energy transition, Tesla, of course, incredible gains this year, now looks set to enter the S&P index, that coming in the middle to late December. Is that the way that you want to play the energy transition, through those sort of pure play businesses? Or are you looking at companies that used to do something else and are now getting the message on energy transition? How are you playing this, Grace?
I think you can play it through both, and sort of whether you're talking about the shift to electric vehicles, or indeed, the generation side, the supply side, where you've got some highly rated utility companies in Europe and in the US. Then I think that when you're talking about the pure plays, whichever sector they fall in, then you've obviously got companies that are quite highly rated, but highly rated for a reason, because they're really driving that push into new addressable markets and delivering superior revenue and earnings growth. So I would absolutely invest in those pure plays to get that superior, sort of revenue exposure. But there are a number of companies, if we take the utility sector or indeed the auto sector, that have undergone a period of transition. Businesses that have been investing for the last 10 years to get them to a point now where you can start to see either renewables be a higher percentage of their mix, or indeed on the auto side, hybrid or electric vehicles starting to be increasingly more meaningful. And certainly, we're at that inflection point where it will be a material contributor to corporate profits for, say, OEMs over the next 5 to 10 years. And therefore, if you invest in these companies in transition, you can not only get the revenue, the earnings growth, but also a re-rating potential as more and more of their business becomes impacted by these, the newer trends around the electricity, the energy transition. So I think there's opportunities in both.
Grace, thanks very much. Grace Peters, JP Morgan Private Bank Head of European Equity Strategy. Grace will be continuing her conversation with Caroline Hepker and I on Bloomberg Radio at 9 a.m. UK time this morning. Let's get a Bloomberg Business Flash then. Some of the top corporate stories that we're covering here at Bloomberg. The Spanish bank BBVA is in takeover talks with rival Sabadell to create one of the country's largest lenders. The move comes a day after BBVA announced it was selling its US-armed PNC Financial. That gives it the firepower for a deal and boosts its capital ratio. Airbnb has filed for its IPO, outlining widening losses and plunging revenue due to the pandemic. But it's projecting optimism for a rebound in demand when the economy does recover. The listing is set to be one of the biggest this year. Sources tell Bloomberg the company plans to raise as much as $3 billion. Santander is buying technology assets from Wirecard as the German payments company winds down its operations. The sale marks an end to the dissolution of Wirecard. The deal will help Santander build its global payments platform. About 500 employees who manage the technology will remain with the unit. That is your Bloomberg Business Flash. Coming up, landing zone identified. Ireland's Prime Minister says the shape of a Brexit deal is becoming apparent. That exclusive interview next. This is Bloomberg.
The big thing was preventing a financial collapse. The central banks acted definitively to do that. That's all that was ultimately historically important. The mistake is for them to vastly exaggerate their continuing relevance. They lack, starting at the zero bound where we are, the capacity to provide meaningful impetus to their economies in any way that is consistent with any concept of central bank functioning. They do not have the capacity to meaningfully affect the degree of inequality. They do not have the capacity to vaccinate people. They do not have the capacity to fight climate change. And they need to acknowledge the limitations of their influence.
Really interesting comments there from Larry Summers, former US Treasury Secretary, speaking to Bloomberg at the New Economy Forum on the limitations of central bank influence and activity. Now, the UK is calling for more realism in Brexit talks with the EU. It says while some progress has been made, there is still a lot of work left to do. Speaking at the New Economy Forum, Ireland's Prime Minister Michael Martin said the contours of a Brexit deal are clear to both sides.
I would still hope there will be a comprehensive trade deal, but it will be challenging. And the three items that have been there now for quite some time, the three issues of a level playing field in terms of access to the single market in Europe, with the UK agreeing to adhere to that level playing pitch. that's proving problematic. My understanding is, and my sense is if that got sorted, the area of a dispute resolution mechanism would get sorted then in terms of how does one arbitrate as to the behaviour of each party to the agreement. Thirdly, the fisheries is proving very difficult as well. A lot of progress has been made on other issues. My sense is if there's a political will in the United Kingdom to get a Brexit deal done, then it will happen. I think the European Union want a deal. Of that, I'm clear. Not at last, but it's our view, and it's Ireland's view as a member state, that it is in the interest of our citizens and the respective economies to get a deal. And thirdly, the fisheries no deal would be very damaging to our respective economies. Logic dictates we should do everything we possibly can to get a deal. It's a responsible thing as politicians to do on behalf of the citizens that we represent.
But we now have an incoming US president who's made very clear his views on the Good Friday Agreement and the importance of there not being a hard border between Northern Ireland and Ireland. Do you think that changes the calculus? Do you think that makes it more likely that Boris Johnson would compromise with the EU?
I think it's helped. I mean, I spoke to Joe Biden during the week. Very warm, clearly very proud of his Irish heritage, and makes no secret of that. And we're looking forward to his presidency, to be frank, from that perspective. But I think the more broader issue is the prospects of a Biden presidency being more multilateral in its thrust and its impulse. That was clear from my conversation with the president-elect that he was going to engage with Europe. Now that's probably more significant in terms of the impact on the UK's response, because it seems to me that the United Kingdom values its relationship with the United States and vice versa. I think President Biden-elect would too. And so therefore, I think the US, the new presidency, would prefer a deal between Europe and the UK. I think the UK is conscious of that. And the president-elect is very committed to climate change. I think Boris Johnson would like him in Glasgow, for example, for the COP. So I can see an alignment of interests here, sparked by the president's commitment to multilateralism and to resetting, if you like, the sets of relationships between the US and Europe that might be better, or might enhance the prospects of a deal.
But there has been, I mean, you've said in the past that both sides have to compromise in order to reach agreement on those three things. But there has been some question about whether the European Union feels like it now has to compromise, given this change of emphasis from the US. If Boris Johnson now feels more pressure from the US, and maybe that trade deal with the US being in doubt without a deal, does Europe need to compromise at all?
Well, look, I think I wouldn't overstate that. I think Europe wants a deal. And I think also it's in our interest that there would be a comprehensive trading deal between the UK and the European Union.
That was the Irish Prime Minister Michael Martin speaking at the Bloomberg New Economy Forum. Let's take a quick look at your movers. Sabadell, the Spanish bank, that stock is on the move once again. It was up strongly yesterday. Lots of talk about BBVA, and they have in fact confirmed their interest there. Imperial Brands also on the move on the back of their numbers, up by 2%. Fortum higher, 1.4% gaining after third quarter earnings. The Mayor of Greater Manchester says 3 million people in the UK have been excluded from the government's financial support during the pandemic. We will speak to Andy Burnham next. This is Bloomberg. Welcome back to the European Market Open, 30 minutes into your trading day. This is what we have for you on European equity markets right now. Moving, in terms of the European equity story, we are moving, well, we're not actually moving very far at all, are we? I was going to say moving modestly to the downside, but barely worth a mention. Eurostoxx 50 fairly flat. We're flat in Paris, flat in Frankfurt, a little bit of downside in London. Let's get a Bloomberg First Word News update. Here are the top stories that we're covering this morning at Bloomberg. The Trump campaign is withdrawing a key part of its lawsuit against the election result in Pennsylvania. It is abandoning demands that almost 700,000 mail-in ballots be thrown out because observers were kept too far away from the count. The challenge is now against a far smaller number of ballots, almost certainly just a fraction of Biden's lead in the state. The strongest storm of hurricane season has hit Central America. It made landfall late on Monday in Nicaragua, bringing catastrophic winds and torrential rain. At 155 miles per hour, its winds are powerful enough to crush homes, snap trees, and make areas uninhabitable for months. Flexible working could be the solution for businesses struggling to recruit women into senior roles. That is according to a new study by Zurich Insurance. Women applying for management jobs jumped 20% after the insurer advertised the roles with part-time and a job share option. As a result, the number of women hired for senior positions jumped by a third. 4 astronauts have arrived on the International Space Station after a 27-hour voyage on the SpaceX Dragon capsule. They'll now begin their 6-month scientific mission aboard the orbiting lab. It's the first time in NASA's history that a full crew has been ferried to the space station on a commercial vessel. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Let's talk about the latest vaccine news. Moderna's vaccine is shown to be 94.5% effective during its large late-stage trials. The CEO, Stefan Bancel, tells us what sets his vaccine apart.
But what is very important with today's news is we can now, for up to 30 days, have a vaccine stored in a regular fridge at 2 to 8 Celsius, like you do insulin. And as you know, every pharmacy, doctor's office, hospital has that capability. So we think it's a very important game changer. The other piece too to keep in mind is our vaccine does not require dilution.
Joining us now with thoughts on the latest vaccine news flow, Sam Fazeli, Bloomberg Intelligence Senior Pharmaceuticals Analyst and Director of EMEA Research. Good to speak to you then, Sam. Really good to get your thoughts. This has been a good 2 weeks for mRNA. So the messenger RNA vaccines, that's the type that we're talking about here with Moderna and also with Pfizer and BioNTech. This is exciting, I suppose, beyond just the pandemic, and it is exciting enough about the pandemic.
Absolutely, Anna. I mean, the beauty of this platform, if it holds up to longer-term scrutiny in terms of how long the protection lasts, is that if God forbid we had a mutation that showed an ability to escape the vaccine, there could be another version of it developed very quickly. So that's where this really helps manage not just this pandemic, but potentially any other pandemics. Of course, they have to be studied when they happen.
Yeah, indeed, and interesting to see if it applied to other diseases that we talked about. But that's a story perhaps for another day, because, of course, the market and everybody's fascination and interest lies in the vaccine at this point. In terms of the longevity of protection that vaccines provide, is there a rule of thumb as to how worth it is to do a vaccine based on the amount of protection it provides? Like if a vaccine provides just 3 months of protection, is it worth doing? Obviously, if it provides a year, perhaps it is. I ask this also because we don't know, there's a lot we don't know about antibodies. We've got the Prime Minister of the UK self-isolating, even though he's already had the virus. He had it in the spring. I wonder what the latest thinking is on how long immunity lasts.
Yeah, I mean, there's a lot of questions in what you've just said. If I've had the infection before and I have been exposed to somebody, I may not get the disease, but I may still be a possible vector for the virus, in that it might still replicate in me, and if I speak and cough and sneeze, give it to other people. So that is something that why people have to self-isolate. What we need to figure out with vaccines also is whether people are still infectious once they've had the vaccine. That still has to be worked out. But in terms of durability, I think the data is strong enough today for us to not worry too much about how long this protection lasts. The question is how quickly can the virus evolve around the vaccine?
Okay, yeah, another question for another day. Sam, thanks so much. Thanks for joining us. Sam Fazeli from Bloomberg Intelligence. Prime Minister Boris Johnson has come under fire for reportedly telling a virtual meeting of Conservative MPs that devolution in Scotland has been a disaster. He also reportedly described it as former Prime Minister Tony Blair's biggest mistake. Joining us now is Andy Burnham, Mayor of Greater Manchester, somebody who no doubt has some thoughts on this devolution, also extending to some of England's cities and regions, of course. Andy, very good to speak to you today. I know you want to talk about those who've been excluded from help from the government through the pandemic, and we'll do that in just a moment. Let me get your thoughts first, though, on these comments from Boris Johnson around devolution. Devolution, a disaster. He wasn't necessarily referring to the whole devolution process, maybe just the way it's been used to push for independence in Scotland, which one might understand would upset a UK Prime Minister.
I think, to be fair to him, that's what he was saying, although they did feel a little off the cuff, and you could apply a sort of more broad interpretation, which would be worrying to me. As Mayor of London, Boris Johnson called for the devolution of power out of Westminster to the English regions, London in that case. I mean, I am making exactly the same argument as he did when he was mayor. You know, we do need to see power taking out of Westminster put closer to people, particularly in the regions of the north of England that often feels the same way as Scotland and Wales, that we are kind of subject to London-centric policies out of Westminster. So I would say to the Prime Minister, that is the best way to secure the UK in the long run. Create a better balanced UK, healthier in terms of the politics, less of a sense of alienation amongst people about what comes out of Westminster. So I think he needs to be careful now to clarify his remarks. I don't think it will have gone down well in Scotland for the Scottish Tories, because it gives independence a bit of a boost, unfortunately, comments like this. But I just hope he will now kind of set out clearly what he believes when it comes to devolution, because in my view, we've seen this year the limitations of trying to run everything centrally from government. It doesn't work well, and it's time for the UK to adopt a different form of governance.
Do you think that the virus will be a catalyst for further devolution, and over what timescale then?
Well, it should be. Because obviously, as I was just saying, you know, if you over-centralise policy and you try and run everything from Whitehall, it doesn't work very well. And we're seeing that with the test and trace system. If we'd had that under control, we would have had teams out on doorsteps having conversations with people face to face. When Whitehall sets it up, they kind of outsource a massive contract. It's all about call centres, and surprise, surprise, it doesn't work very well. So that, in a very practical way, is the difference between over-centralisation and localisation of decision-making and services. And I would argue that had we gone down if we'd localised rather than centralised at the start of this pandemic, we would probably have mounted a better response as a country.
Andy, I know that you've been writing about those who say they've been ignored by the government through the pandemic, those who have not received as much money as other parts of the community. Is this around those who are self-employed, who are maybe difficult for the system to target? Who is it that you think has not been paid enough through this process?
Well, there are 3 million people in all, and they're people in different categories. People who are PAYE freelancers, so people who pay their tax at source, people who have become newly self-employed, so haven't yet submitted a tax return, people who are paid as company directors of small businesses. When you add them all together, they amount to a lot of people. And to be honest, I don't buy the excuse that we're hearing from the government that it's all too complex to help these people. They are taxpayers. So we could go to what they've paid in tax over the years and see how they've been harmed this year. So I am calling on the Chancellor, who's making a spending statement a week tomorrow. There'll be 3 million people across the UK hanging on his every word. They are desperate for help now. And it's no exaggeration to say that jobs homes, marriages, lives even depend upon what he's got to say. Because myself and the Mayor of Liverpool City Region, Steve Rotherham, we had a meeting last week with the campaign group Excluded UK. We met many of the people who've been affected in the Northwest. And, you know, it's quite heartbreaking actually to listen to them. And the truth of the matter is, we have a growing mental health crisis here on top of a pandemic, and it's why the government really does now need to step in to help them.
Yeah, with that in mind, do you think that the lockdown measures should continue past early December? This, of course, an England-wide policy at the moment, the second lockdown that we're currently in. Do you think that those measures should be extended?
Well, I think we're going to have to see where the cases are, aren't we? But I do have a real problem with the idea of putting people under perpetual lockdown or restrictions. The World Health Organization is very clear that lockdowns and restrictions shouldn't be used in that way. They should be used as a short, sharp break to get cases down, but not sort of always in force. And I think what's happening here is the government are going for sort of halfway house restrictions that are just never lifted. And I think, as I say, that adds to what I was saying a moment ago about a growing mental health crisis in the country. So I would say we need a bit of a rethink here. We need to be more targeted in our use of these restrictions. You know, close down problem business premises, not all business premises. Encourage more compliance with face coverings when people are out and about, but perhaps not always go for the blanket restrictions approach. So that's the message that we've been giving to the government from Greater Manchester, and I very much hope the government will listen.
Andy, thanks very much for joining us. Andy Burnham, the Mayor of Greater Manchester. Time for something entirely different. 42 minutes into the European equity trading session. European equity markets look to the downside, but not by much. Let's turn to what hedge funds are doing with their money. It's 13F season. Among the investment giants reporting their third quarter holdings overnight was Warren Buffett's Berkshire Hathaway. Berkshire's filing reveals a big bet on vaccine makers. Joining us now to discuss is Danny Berger. Danny, good morning again. So what stocks or which stocks did Berkshire buy over the quarter?
And there's a really distinct flavor to Berkshire's bets, and this reflects what Warren Buffett himself has said earlier this year. It's caution over the U.S. economy, but they initiated new positions in stocks that would benefit from a vaccine. So just months before Pfizer announced the effectiveness of their vaccine, Berkshire added a new position to Pfizer, as well as Merck, which is currently developing a COVID vaccine, as well as some other pharma companies you can see there. Now, in terms of what they sold, it was all about financials. Berkshire Hathaway well on its way to completely exit JP Morgan and Wells Fargo, reducing positions by as much as 96% in some cases, also slashing some local banks as well in terms of exposure. Again, this reflects really some of the bearishness that Warren Buffett has on the U.S. economy.
And sticking with the US and the US equity story, we heard just overnight that Tesla is set to join the S&P 500 the 21st of December, I think, Danny. What sort of effect will that have on the benchmark?
Well, look, Tesla's huge. It's set to be one of the biggest companies at $390 billion of market value to be added into the S&P 500. And of course, that's a disruptive event. Asset managers who track the benchmark would have to sell about $40 billion worth of other equities to make space for Tesla. So Dow Jones, S&P themselves have gone out to investors and said, hey, should we do this in two phases? They're looking for feedback right now to ease the transition of Tesla into the index. Of course, with that index comes about $11 trillion of passive investments. And that's part of the reason why we saw Tesla have this huge move overnight once the news was announced, because investors will have to track that index, will have to buy into Tesla. It can also help the S&P 500. Look how much better Tesla has done than the benchmark. This is part of the reason the NASDAQ 100, which has Tesla, has outperformed the main U.S. equity gauge. I should say, with that, Elon Musk's wealth gets higher by $15 billion, surpassing Mark Zuckerberg to become the third richest person in the world. I mean, what a week it's been for Elon Musk between a coronavirus diagnosis, SpaceX launch, and now this latest with the S&P 500 inclusion of Tesla, Anna.
That is incredible. My week looks incredibly pedestrian by comparison. Danny, thank you very much. Danny Berger with details on Tesla and beyond. Up next, with US-China relations at their worst in decades, we will hear from speakers at the Bloomberg New Economy Forum about the way forward from here. This is Bloomberg.
A competitive approach to China was inevitable, but keeping it healthy and not pernicious is vitally important, and that won't be easy.
But unless there is some basis for some cooperative action, the world will slide into a catastrophe.
But what I do believe both sides are capable of through the highest level diplomacy at an early stage of the Biden administration is to define the parameters.
We should build an open world economy that works for all. We must firmly safeguard the multilateral trading system under the WTO and unequivocally reject unilateralism and protectionism.
When your economy becomes, so big and your interests are all over the world, you have to protect your own interests.
The American administration is about to change, but the clock will not simply be rewound.
I hope that he will be able to focus his mind on developing a framework for an overall constructive relationship with China, because the last 4 years have been quite a tumultuous ride.
Unfortunately, some forces are acting against the trend of the times. They have trumpeted the decoupling and willfully walked away from international commitments, posing challenges to multilateralism.
I don't think we're going into a world of deep protectionism going forward. I see more regionalism.
Just some of the really interesting views expressed by guests at Bloomberg's New Economy Forum, giving their take on US-China relations. And coming up later at the New Economy Forum, ECB President Christine Lagarde will be joining the proceedings. Don't miss that conversation at 4 p.m. London time. Let's get a Bloomberg Business Flash. Some of the top corporate stories we're covering for you here at Bloomberg. Tesla is joining S&P 500 next month as its largest ever new member. It follows months of speculation which helped the company's valuation skyrocket to almost $390 billion. It will be one of the index's most influential members, with a weighting similar to that of Berkshire Hathaway or Johnson & Johnson. The Spanish bank BBVA is in takeover talks with rival Sabadell to create one of the country's largest lenders. The move comes a day after BBVA announced it was selling its US arm to PNC Financial. This gives it the firepower for a deal and boosts its capital ratio. Airbnb has filed for its IPO, outlining widening losses and plunging revenue due to the pandemic, but it's projecting optimism for a rebound in demand when the economy does recover. The listing is set to be one of the biggest this year. Sources tell Bloomberg the company plans to raise as much as $3 billion. That is your Bloomberg Business Flash. Up next, when will the S&P 500 hit 4,000? We will put that question to the Markets Live team. Christine Aquino joins us next. This is Bloomberg. Welcome back to the European Open. 53 minutes into a European equity trading session that looks modestly negative for European stocks, down by 0.1%. US futures negative, actually fairly mixed if you include NASDAQ. Let's get to the Markets Live team. Christine Aquino joins us now. And I want to ask you about US equities. First off, the question of the day then, Christine. When will S&P 500, when will it get to 4,000? I know you've been taking soundings on this on the Markets Live blog. What have you been hearing?
Yeah, Anna, I mean, it's obviously difficult to put a number exactly on when, but I think the skew as far as the responses that we've gotten in within the Markets Live blog as well is that it is more likely to go toward 4,000 than much lower from here, and the reason being is that the sentiment in the market really is that investors are very willing to take the S&P 500 higher every time we get bouts of good news. And yesterday we saw that with the Moderna announcement reaction, and we did get the positive reaction as well, similar to what we saw from the Pfizer announcement last week. And so we're kind of entering this period now where every time there's a marginally positive development on the vaccine front, equities are just very willing and happy to power higher.
And what about the things you're looking ahead to then, Christine? Because I know we've got US retail sales due out a little bit later. What's the expectation there?
Yeah, I think, that is going to be really a big one to watch, especially as we're entering the holiday period. It's been a battering, absolutely shattering year for retail, and retailers are preparing to capitalize on this sort of new environment into the holiday period where there's still a lot of uncertainty regarding lockdowns in various U.S. cities and indeed in various countries across the globe. And the concern really is that whether shoppers are going to be as willing as they have in the past to pile into the holiday shopping period. Retailers are getting creative in capitalizing in that. They're trying to cater to this sort of different environment that we're in. But the question is whether that's going to be enough to turn around really just such a dour year. And yeah, I think it really will remain to be seen whether consumer sentiment or the positive sentiment that we're seeing in equity markets translates very directly into the real economy via consumer sentiment.
Christine, thanks very much for joining us. Christine Aquino, who leads the Markets Live team here in Europe. That's it for this hour of the program. Surveillance is up next. They'll be taking you through all the highlights from the Bloomberg New Economy Forum. European equity markets on the back foot this morning. This is Bloomberg.
The rally stalls. Moderna's highly effective vaccine sends U.S. stocks to record highs, but optimism is tempered amid fresh restrictions across America. Full speed ahead for Tesla. The electric car maker is set to join the S&P 500 next month as its biggest ever new member. And U.S.-China ties take center stage at the Bloomberg New Economy Forum. Bill Clinton says Xi Jinping's long-term reign has upended relations between Beijing and Washington. We'll bring you that conversation. Well, good morning, everyone. Happy Tuesday and welcome to Bloomberg Surveillance. We have another action-packed day for you. This is what the markets are looking at. Now, the focus, of course, is firmly on the vaccine trial data that was out of Moderna yesterday. The focus is, of course, on the fact that we could have a vaccine a bit quicker than expected, simply because it's the second trial data that is actually a bit better than what economists or actually what analysts and watchers were thinking. Now, this global stock rally, though, powered by hopes that the vaccines will bolster economic growth, was paused. This is partly because investors are also weighing the near-term spread of the virus. I think investors are also looking at valuations, and maybe there's a little bit of profit-taking getting underway. I did want to show you Tesla. I'll bring it in my next data check, but they jumped more than 10% in after-hours trading after that announcement that it will join the S&P 500 index on December 12th, and then in other asset classes, treasuries drifting with the dollar, WTI crude oil advancing above $41 a barrel. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. The Trump campaign is withdrawing a key part of its lawsuit against the election results in Pennsylvania. It's abandoning demands that almost 700,000 mail-in ballots be thrown out because observers were kept too far away from the count. The challenge is now against a far smaller number of ballots, almost certainly just a fraction of Biden's lead in this state. In Germany, Chancellor Angela Merkel has failed to push through a slate of tougher restrictions to tackle the pandemic. She's postponing major decisions until next week after being unable to reach a deal with regional leaders. Instead, she's urging people to limit public and private gatherings. Now, the strongest storm of hurricane season has hit Central America. It made landfall late Monday in Nicaragua, bringing catastrophic winds and torrential rain at 155 miles per hour. Its winds are powerful enough to crush homes, snap trees, and make areas uninhabitable for months. And finally, 4 astronauts have arrived on the International Space Station after a 27-hour voyage on the SpaceX Dragon capsule. They'll now begin their 6-month scientific mission aboard the orbiting lab. It's the first time in NASA's history that a full crew has been ferried to the space station on a commercial vessel. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, I promised you the share price for Tesla after hours, so promise delivered. Here it is. It gained some 12% after that announcement yesterday that Elon Musk's car maker will join the S&P 500 index after December 21st. You can see pre-market at the moment gaining some 12.3%. Now, let's get back to our top story, vaccine optimism. Moderna's vaccine was shown to be 94.5% effective during its large late-stage trials. Now, the chief executive, Stéphane Bancel, told us what sets his vaccine apart.
But what is very important with today's news is we can now, for up to 30 days, have a vaccine stored in a regular fridge at 2 to 8 Celsius, like you do insulin. And as you know, every pharmacy, doctor's office, hospital has that capability. So we think it's a very important game changer. The other piece too, to keep in mind is our vaccine does not require dilution.
Now, for more on the vaccine, joining us is Sam Fazeli. He's Bloomberg Intelligence Senior Pharmaceuticals Analyst and Director of EMEA Research. Sam, a lot of optimism, and this was widely expected because of the nature of vaccine, which is quite similar to what the Pfizer vaccine trial actually gave us, and that was last week. What questions do you have to make sure that this is a vaccine that works and that we can roll it out quickly?
Yeah, so good morning, Francine. Moderna did give us actually a little bit more than Pfizer did. So we know, for example, that they prevented so far the development of severe disease. So nobody in the vaccine group had any severe COVID. And also, it looks like it also works in the elderly, which is a crucial element of the analysis. And we don't know that about the Pfizer vaccine. I don't expect it to be necessarily different, but time will tell. So the key thing that remains for all of them is obviously more details in terms of, more patients, and we could always ask for more as well, but clearly the durability of the vaccines. And that's something that it would just be nice to see that data as it comes out and we get to analyze it.
Sam, give me a sense of exactly what these vaccines are. I mean, there's a lot of misinformation, or there's a lot of misunderstanding about what these two types of vaccines are, which are RNA, which are different to any other vaccine that we've had before. Is it going to be hard convincing people to take this vaccine?
I mean, people shouldn't really, shouldn't make any difference to anyone, because all that's changed here is that rather than making proteins that you inject or pieces of the virus that then you inject into people first in a lab, you're just giving them the genetic material that allows their own bodies to manufacture it. And we have extremely delicate systems and complex systems that control all this. So there's nothing that and RNA doesn't get into your genes, doesn't do any of that. It's not possible. So it just sits there and allows your cells to produce the vaccine inside your body. And the beauty of it, of course, is that it's very easy to produce another version of it. So from that perspective, I wouldn't worry about it at all.
Sam, if somebody takes a vaccine, so it means that you're less likely to get sick, or almost unlikely to get sick. Can you still be, a vector of transmission? Can you still give it to someone else? Yeah, I mean, Francine, that's the question that nobody can answer today, including the CEOs of Pfizer and Moderna. And unfortunately, the trials were not conducted in a way that would allow this to be properly analyzed. So it has to be something that people look at further down the road. We don't know if people who are vaccinated, who do not get disease, are still infectious or not. Sam, thank you so much for all of the insight. Sam Fazeli there of Bloomberg Intelligence. Now, to talk about the vaccine and the impact on the markets is Patrick Armstrong. He's Chief Investment Officer at Plurimi Wealth. Patrick, so we have some good news from Moderna after the very good news from Pfizer a week ago, but markets are wobbling a little bit. Are they worried about valuations, or is it, is there just too much good news priced in?
Well, markets have gone very far, very quickly. So month to date, the MSCI World's up more than 10%. So the pullback we're seeing today at a fraction of a percent is inconsequential, really, versus how things have rallied. I do think valuation will matter at some point. It's not something that matters right now. It's liquidity, central banks, reopening of the economy, and the vaccine pushing risk assets and in particular, cyclical assets, the reopening of the economy, that you can see that window happening with more certainty than just a possibility maybe it was a few weeks ago. And the pullback today makes sense given how far things have run. I still think there's headwinds for some of the cyclical sectors in the near term, even though you can see an end to those over the medium term now.
So, Patrick, where do you see value? If you were to, pick a part of the market that can still rise, given where we are, where is that?
Well, our most recent additions have been in some of the hard-hit value stocks recently, and it comes from that I believe that there will be the growth, the reopening of the economy, and it comes from I had a very big position in quality and growth leading into this week, and we've muted that out somewhat. So we've bought companies like Peugeot, I think some of the travel companies. You've got the Airbnb IPO filed yesterday. I guess there's a window for that opening up and travel emerging again. Those kind of companies saw their profitability decimated, and with the path back to profitability of these companies, I do think there probably is some value in some of those beaten down stocks at this point.
Patrick, so the big news yesterday, and I know a lot of people were tweeting about it, a lot of people were looking at exactly what that meant. Tesla on the S&P from December 21st. How did you react to that?
Well, it's not a surprise that the timing, you never know when it's going to come, when it's between board meetings, but the math is staggering on Tesla. If there's $11 trillion tracking the S&P 500, and Tesla's market cap on a free float adjustment of about 80%, will make Tesla the 7th biggest holding in the S&P 500. So that'll put it at about a 1.2% weight before today's price rise that we're going to get. And that'll mean $130 billion of passive money will need to buy Tesla shares. You're also going to have active money that is benchmarked against the S&P. And if you're worried about tracking error, from December 21st, you'll have a risk for not owning Tesla. So put that on top of the big short position on Tesla. It's you can see really strong demand that's just structural now for the next 3 or 4 weeks. So it's not a surprise that it's entering the index. The timing yesterday, no one indicated it was going to be announced yesterday. There's still some question. They may not do the full allocation on December 21st as well. S&P is asking for some guidance from investors if maybe they should do it in 2 stages as well.
Patrick, thank you so much. Patrick Armstrong there from Plurimi Wealth stays with us, and we'll talk a lot more about Tesla shortly. Coming up, we won't not only talk about Tesla, but of course valuation of that sector as a whole at almost $390 billion in value. Tesla set to become the biggest company ever added to the S&P 500. So we discuss more about the S&P 500 shortly. This is Bloomberg.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Tesla soared in late trade on news that the stock is joining the S&P 500. The 17-year-old car maker will join the index on December 21st after months of speculation and a temporary setback when it failed to make the grade in September. Now, the anticipation has driven a near 5-fold rally in the stock this year, making Tesla the most valuable company ever to be added to the gauge. Well, we also found out yesterday that Airbnb filed for its IPO, outlining widening losses and plunging revenue due to the pandemic. But its projected optimism for a rebound in demand when the economy does recover. The listing is said to be one of the biggest this year, while sources tell Bloomberg the company plans to raise as much as $3 billion. Let's get back to Patrick Armstrong from Plurimi Wealth. Patrick, we touched on Tesla, and I want to go back to actually what will be in the S&P 500 for now. We saw also this huge rotation in the markets. How long can that continue for?
It can continue. For value stocks to have a sustainable recovery, you need to have either a steeper yield curve or higher interest rates. And if that's driven by economic growth, where full capacity and full employment, I think you'll have a sustainable value rally in that scenario, because when future earnings are discounted at next to nothing, you should pay a lot more for growth companies. If there is a dynamic that leads to the steeper yield curve, which a strengthening economy would lead to, all other things equal, you still have yield curve control, I guess, in the cards at some point. I think that's the real catalyst for value, that people believe in economic growth. There's a higher discount rate for growth multiples, and the cyclical companies generate their growth. The heavy lifting for them is done based on economic growth, whereas more of the secular growth companies have their growth pinned to what their products are, to what their barriers to entries are, things like that. So much more consistent and stable growth from the quality growth companies, but the cyclical companies basically have that tailwind of the improving economy should we get that.
The question we're asking today, Patrick, on the MLive blog, and I urge everyone to check it out, it's really good, as always, is when will the S&P hit 4,000? What will be the catalyst for that?
You'll have to see earnings growth. It can't just be multiple expansion at this point, I don't think. So 2020, 2019, earnings are not dissimilar to where they were in 2018, but the S&P is up massively over that period. So it was up 30% last year, and it's up 15% almost, 10% this year. So you do have to see earnings start to be a component of that expansion. With economic growth, we probably think the U.S. is going to grow at close to 5% next year. That's still not going to put it anything close to full capacity at full employment. So you will have economic growth that will obviously lead to some earnings growth. You put me on the spot, and I'm going to say 2023, January 2023 for 4,000.
Patrick, when you look at some of the other things that actually, we need to talk about, are we going to see a resurgence of IPOs, including Airbnb? Once we have a vaccine, does it suddenly just become back to what it was like in 2019?
You should have a surge of IPOs, because there are these unicorns that were supposed to be mythical things that don't exist, and now there's hundreds of them that have basically billions and billions in market cap and traded, basically not traded, but in equity issuance to private investors. With this kind of multiples you're getting in the public markets, it makes a lot of sense. There's tons of liquidity. That liquidity is increasing every month with what central banks are doing, keeping interest rates pegged at zero and buying bonds, treasuries, corporate bonds, all of these things push people into riskier assets. So I do think with these multiples, it's just a no-brainer for private companies to take the multiples they can get. And there's obviously demand. You see the oversubscription of all these high-profile IPOs. So I do think there will be a wave of IPOs in the coming year.
Patrick, what does a Biden administration mean for stock markets?
It depends on the Senate at this point still. So we've got 2 Senate races that are going to be finalized in January. It's looking like the Republicans will win those, but as you know, with elections, there's never certainty. If we do see the Democrats take control of the Senate, then it's a massive fiscal stimulus from Biden. So environmental spending on infrastructure, $2 trillion, raising minimum wages to $15, the U.S. manufacturing really pushing for goods that the federal government gives out contracts for to be manufactured in the United States. All of those things, very pro-growth. The consequence of those things would be higher taxes. But in our base case, you've got a Republican Senate that doesn't allow any of those things. So Biden will re-enter the Paris Accord. There will be some tailwind for environmental companies, but the Senate won't approve the $2 trillion he wants to allocate there. They won't approve minimum wage being doubled to $15 an hour. So it's still iffy, depending on how the Senate races go. But with gridlock, I think you're going to have less ambitious policies from Biden just because they won't be able to get through.
What happens with China? So does the U.S.-China relationship get better from here, or could it actually get worse?
I don't think it gets worse. I think Biden's playbook will be ending of tariffs over time and basically synchronizing tariffs the U.S. do with Europe and its other major allies. So it'll be going from a one America, America first, to part of the old global order and the globalization where basically pushing liberal values and the benefits of globalization. I think that'll be going back towards how the previous regimes were in America. You probably don't get there fully. It won't be everything reversed. So I think it's probably good news for global trade, good news for China. But if the U.S. does coordinate with Europe, any tariffs and pressure they have will probably have much higher efficacy against China as well.
Patrick, thank you so much. Patrick Armstrong, their Chief Investment Officer at Plurimi Wealth. Now, coming up a little bit later, of course, it's day 2 of the Bloomberg New Economy Forum. One of our highlights is the discussion with the ECB President, Christine Lagarde. Don't miss that. It starts at 4 p.m. London time, and this is Bloomberg.
competitive approach to China was inevitable, but keeping it healthy and not pernicious is vitally important, and that won't be easy.
But unless there is some basis for some cooperative action, the world will slide into a catastrophe.
But what I do believe both sides are capable of through the highest level diplomacy at an early stage of the Biden administration is to define the parameters.
We should build an open world economy that works for all. We must firmly safeguard the multilateral trading system under the WTO and unequivocally reject unilateralism and protectionism.
When your economy becomes, so big and your interests are all over the world, you have to protect your own interests.
The American administration is about to change, but the clock will not simply be rewound.
I hope that he will be able to focus his mind on developing a framework for an overall constructive relationship with China, because the last 4 years have been quite a tumultuous ride.
Unfortunately, some forces are acting against the trend of the times. They have trumpeted decoupling and willfully walked away from international commitments, posing challenges to multilateralism.
I don't think we're going into a world of deep protectionism going forward. I see more regionalism.
Well, those were some of the guests from the Bloomberg New Economy Forum giving their take, of course, on their U.S.-China relations. Now, I was just looking at the markets, which is why I was on my phone. The market's really not too worried about what's coming up ahead in terms of U.S.-China. The focus, of course, is on the vaccine and the short-term number of infections. Coming up, a discussion with the ECB President, Christine Lagarde. Don't miss. That's at 4 p.m. London time. And this is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
It will be available at first at the level of tens of millions of doses
I would suspect before the end of this year, some 20 to 40 million doses will be made available. We've already said 20 million of it will come from us. Then in going into the first quarter, that number should ramp up to as much as 50 to 100 million doses just from us. And that will ramp up through the year 2021 to 500 to 1 billion doses.
Well, that was the chair of Moderna speaking to us yesterday after the vaccine was found to be 94.5% effective in the latest trials. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. President-elect Joe Biden says containing the coronavirus pandemic is vital to economic recovery. He's vowing to spur a rebound in 2021, but also urging Congress to pass a stimulus bill this year to deliver immediate relief to Americans. Biden says it should be like the $2.2 trillion HEROES Act already passed by the House. Flexible working could be the solution for businesses struggling to recruit women into senior roles. That's according to a new study by Zurich Insurance. Women applying for management jobs jumped 20% after the insurer advertised the roles with part-time and job share options. As a result, the number of women hired for senior positions jumped by a third. And 4 astronauts have arrived on the International Space Station after a 27-hour voyage on the SpaceX Dragon capsule. They'll now begin their 6-month scientific mission aboard the orbiting lab. It's the first time in NASA's history that a full crew has been ferried to the space station on a commercial vessel. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Bill Clinton says Xi Jinping's long-term reign has upended U.S.-China relations. The former president says America and its allies will need to take a more coordinated approach to dealing with Beijing. Well, he made the comments in a conversation with the former UK Prime Minister Tony Blair at the Bloomberg New Economy Forum.
For the new administration in the U.S., I think the big challenge with China is to get what I would call a strategic framework for dealing with China, rather than a series of ad hoc reactions to whatever the Chinese may be doing. And I don't know what you think about this, but I always think you just got to distinguish between 2 things. One is the power of China today is a fact, and it's a perfectly justifiable fact in the sense of it's a large population country, ancient civilization, huge economy. China is and should be one of the great powers of the world for the 21st century. The problem is the system is a different system. And whereas I think when you and I were in office, there was not an expectation exactly, but a hope that as China opened up and developed, then political development, not in terms of turning into a Western-style democracy, but political evolution in the direction of more liberalism. I think that was our hope, and possibly it certainly was my actual expectation. But you've got to say in the last few years, there's been more external aggression and more internal repression. So that's just a fact. So that's what we're dealing with now. And I think the strategic relationship is very important to define, because you need America and Europe to work together. I think it would be bad if, as it were, Europe is kind of navigating between the US and China. And I think that strategic framework has to accept that there will be areas of confrontation, and you've just mentioned some now. There are inevitably areas of competition. Technology is going to be one. But you need to leave some space for cooperation. Because whether it's the pandemic or indeed what we'll talk about a bit later, climate change, none of these problems can be solved today without the participation of China. And therefore we've got to, I think the analogies with the Cold War are kind of misplaced. And indeed, as some of the Bloomberg documents show for the forum, I mean, decoupling is going to be painful for both of us, for the West and for China. So I think this, if you can get as you rightly say, if the new president comes in and has a more strategic framework, then you can identify, consistent with that, areas of cooperation and at least offer China the possibility, whatever differences there are, for those areas of cooperation to be fruitful for both sides.
I agree with that. I also think we can strengthen our negotiating position, if you will, or our cooperating position by reestablishing the relationships that we had with other countries in Asia and Southeast Asia in particular, who were our allies, who would have been the principal partners in the trade deal that President Trump killed, the Trans-Pacific Partnership. Whether the new administration chooses to revive that or not, we can clearly do more to strengthen our partnership and work with them. And we have to recognize and just level with people, the old Chinese system, which was by no means a democracy, still guaranteed enough debate and play and openness because there was a regular rotation of leadership. And now that it appears that a person is in charge of China who intends to stay there for life, in essence, that changes things. But we shouldn't accept or assume that it's all going to be bad without working to make it better. We got to try to, we got to give the new administration a chance to articulate an approach and then try to achieve, in cooperation with Europe and the United States and the international bodies, a strategic partnership which will enable us to do good things together and try to minimize the bad things that we think will happen if we just walk away.
Former U.S. President Bill Clinton, former U.K. Prime Minister Tony Blair in conversation there at the Bloomberg New Economy Forum. And of course, we'll have plenty more from the New Economy Forum today. Coming up, Warren Buffett's Berkshire Hathaway has taken a big bet on vaccine makers. We'll dig down into his quarter's 13F filings. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Tesla is joining the S&P 500 next month as its largest ever new member. It follows months of speculation which helped the company's valuation skyrocket to almost $390 billion. It will be one of the index's most influential members, with a weighting similar to that of Berkshire Hathaway or Johnson & Johnson. Spanish bank BBVA is in takeover talks with rival Sabadell to create one of the country's largest lenders. The move comes a day after BBVA announced it was selling its US arm to PNC Financial. That gives it the firepower for a deal and boosts its capital ratio. And Airbnb has filed for its IPO, outlining widening losses and plunging revenue due to the pandemic, but it is projecting optimism for a rebound in demand when the economy does recover. The listing is set to become one of the biggest this year. Sources tell Bloomberg the company plans to raise as much as $3 billion. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. So it's a 13F season among the investment giants reporting their third quarter holdings in the U.S. Overnight was Warren Buffett's Berkshire Hathaway, and Berkshire's filing reveals a big bet on vaccine makers. Well, joining us to discuss all of this is Bloomberg's Danny Berger. Hi, Danny. First of all, what stocks precisely did Berkshire buy over the quarter?
So, Francine, as you mentioned, there were a lot of pharma stocks that Berkshire did add. This really reflects some of what Buffett has been saying all this year, some concerns over the U.S. economy. And these bets reflect hopes of a vaccine, or at least the benefit that the vaccine news could bring to these pharma companies. So he put new positions, and he and Berkshire as a whole put new positions in Merck. They're, of course, developing a COVID therapy. And just months before Pfizer rallied after announcing the success of its vaccine, Buffett added in the 13F. You can see some other pharma companies there as well. In terms of what Berkshire sold, they are well on their way to exiting positions on JP Morgan, Wells Fargo, in some cases exiting about 96% of the stock it owned. Overall, Berkshire reduced its financials position by about 4%. You can see they slashed some of the local banks, M&T and PNC as well, Francine.
Danny, sticking with U.S. equities, Tesla also set to join the S&P 500 next month. What sort of effect does this have on the benchmark?
Well, look, we've been talking about this today, about how massive Tesla is, and that can be a disruptive event to put a $390 billion market cap stock into the greater index. To put it in some figures, managers who track the index would have to sell about $40 billion worth of other stocks in order to just fit Tesla in. So Dow Jones, S&P, the owner and the committee behind the benchmark is seeking now comments from investors saying, hey, should we do this in two parts? What's the best way to include Tesla? This could also just generally be a boon for the S&P 500. Tesla has rallied massively, part of what's driven Elon Musk's wealth here, about a five-fold increase for the stock. And that's part of the reason why the NASDAQ 100 has outperformed the S&P 500. So this could help the index. Certainly Tesla rallied overnight as long as a $15 billion gain in terms of Musk's wealth. Francine?
Danny, thank you so much. Our Danny Berger there with the very latest on some of these U.S. stocks. Now, a very busy day for the New Economy Forum. Business and political leaders taking on issues from the economic fallout of the pandemic to the future of global trade and climate change. Now, we also spoke to the United Nations Secretary General, Antonio Guterres, and he told me his hopes for getting to net zero carbon by 2050.
I believe that he has committed to a number of very important transformations in the U.S. economy. And again, the role of the U.S. private sector, the role of cities, the role of the different states has been so dynamic, and Mike Bloomberg has been so active in pushing for it, that we are already seeing in the U.S. Very important steps moving in the right direction. What happened to coal? And again, a very important Mike Bloomberg initiative is the proof of that. So I think that with the government committed to move forward, with the government committed to do the right thing, I believe the extraordinary dynamic of the American society will allow us to reach net zero emissions in 2050.
But Secretary General, how worried are you that the sitting president of the world's superpower and actually the largest UN donor has still refused to concede the elections?
Well, I think that that problem will probably be solved soon. We don't interfere in the electoral processes of any country in the world, and I must say I have total confidence in the solidity of the US institutions.
The United Nations Secretary General Antonio Guterres is speaking to us at the Bloomberg New Economy Forum. Now, coming up, when will the global economic recovery from 2020's coronavirus-related recession ease? UBS has just released its year-ahead outlook, and we'll be speaking to Mark Hafele, the company's global chief investment officer, next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, when will the global economy recover from 2020's coronavirus-related recession? Well, UBS has this morning just released its year-ahead outlook. The wealth manager says its base case scenario is for economic output and corporate earnings to both rebound to pre-pandemic levels during 2021. Well, let's get straight to Mark Hafele. He's Chief Investment Officer at UBS Global Wealth Management and, of course, one of the authors of this report. Mark, great to have you on the day where you release this 2021 outlook. Is this based on having a vaccine, or are we going to see a rebound no matter what?
Well, I think that the vaccine is key to the speed of the recovery. And so a widely available vaccine by the second quarter is in our base case. And the effectiveness rates of this vaccine are particularly important for the speed with which we can start to see that normalization which we would expect to be in full swing, say, third quarter of 2021.
I have to say, your year-ahead outlook, Mark, is simple to read. It's to the point. It's wonderful. I know we protect the copyright, but congratulations on, just 16 pages where it really breaks it down. Some of the questions that you ask is, what does it mean for the U.S.? How quickly can the world actually recover? What do those questions mean for where you want to put your money?
Well, I think that, we're calling it the year of renewal and renewed growth and new leadership, both in the market and the U.S., and then a real focus on the renewable future. So I think that gives you a couple clues. I mean, the first is we do buy into this view that we will rotate away from mega cap tech and into some of the laggards, which are going to catch up. Now, we've seen some of that already, but we think that that can continue for a while yet as we get this corporate earnings rebound. That should foster a lot of good things happening, including some companies, being able to refinance at lower rates, which can help earnings and things. We think that the leadership change in the United States is important for a couple of reasons. One is, while the U.S. voters chose kind of legislative gridlock overall, there will be changes, particularly towards sustainability. And that's important globally because what we've seen this year, this trend towards these big pledges for carbon neutral by the middle of the century, that leads a lot of investors towards what the next big thing is going to be.
Mark, what does it mean for, you say there's opportunity in the 2020 laggards. What exactly are those? I know you mentioned some of the mid-cap stocks. Where do you find them region by region?
Well, we like the UK market. I think that that is going to create opportunities because it has been beaten down so much, and compared to other regions and sectors that have improved, we like the cyclicals and industrials, which that is part of. So I think that's one of the ways that we would play this rebound. And then we're looking, I think, over the longer term, in tech, what do you do? Moving more towards these companies that are disruptors within sectors. So we're looking at fintech, we're looking at health tech, and we're looking at green tech, along with playing this 5G rollout, which is accelerated both by kind of the separation between U.S. and Chinese tech, but also by this rollout of things like the new iPhone.
Mark, if you're expecting a weaker dollar, how do currencies fit in a portfolio for 2021?
Well, I think that it's a backdrop that people have to understand, but I think in terms of their portfolio allocation, but we would expect most of the G10 currencies potentially could do better, but also some of the higher yielding currencies in Asia are more attractive. So one of these themes, this hunt for yield, means that we would expect that some of that money could, for example, flow into some of these higher yielding Asian currencies on the back of that as people go further abroad to try and earn a yield.
I was interested, Mark, in your call that you actually like some of the UK assets. Is that because they've been oversold, or is it just a matter of protecting yourself in a next downturn elsewhere in the world?
I think it's oversold. They haven't recovered in part because the index in the UK is so cyclically oriented, and so that and then of course we expect that there will be some resolution to Brexit going forward. So all those factors, can help. And this all comes against the backdrop of the continued fiscal and monetary stimulus, which we think is going to be in place. So as people rotate out of the stay-at-home trade, we don't think that the market is necessarily going to sell off, but that people are going to look for the things that just need to catch up to what has happened in some of these highfalutin sectors of the market.
Mark, how do you protect yourself if things don't go to plan and we see a downturn?
Right. Well, I think that one of the areas that we often see our investors turn to is gold. Now, I think particularly if things are not going well, that's one of the places to diversify. And then the other thing that we see a lot of clients doing is using what is still relatively high volatility to try and harvest some of the premiums that they can achieve with structures, option structures, as a way to kind of cushion the potential for some of the downturn.
Mark, very quickly, what do you think is being mispriced in the market? Is there something that investors are not focused right now or overly optimistic about?
Well, I think what they're mispricing is, in some ways, the desire for people to return to normalcy. And when you have a vaccine that's this effective, I think in some ways that's still really being mispriced.
Mark, thank you so much. As always, Mark Heffler there, the Chief Investment Officer at UBS Global Wealth Management with his 2021 reports. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. Don't miss our conversation with the ECB President, Christine Lagarde. That's at the New Economy Forum, and that's a little bit later on. In the meantime, a global stock rally that was powered, of course, by positive news of vaccine paused today. Investors weighing the near-term spread of the virus against positive news of the vaccine. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
rally stalls. Moderna's highly effective vaccine sends U.S. stocks to record highs, but optimism is tempered amid fresh restrictions across America. Full speed ahead for Tesla. The electric car maker is set to join the S&P 500 next month as its biggest ever new member. And U.S.-China ties take center stage at the Bloomberg New Economy Forum. Bill Clinton says Xi Jinping's long-term reign has upended relations between Beijing and Washington. Well, good morning, everyone, and welcome to Bloomberg Surveillance. Tom and Francine from London and New York. Tom, a lot going on in the markets. If you look at the rally it's petering out, maybe taking stock of some of the valuations, maybe just focusing on the fact that even if we have a vaccine, we could have a lot more infected and a lot more people dying until we have a workable vaccine.
You know, the dynamics in the pandemic are real, and of course, the job economy is important. What we know, folks, is Francine's running a construction site. That the room you're putting in, Francine, with the construction we hear, that's the shoes, right? Like that's just the shoe extension off the closet.
The neighbors, Tom, I'm not sure if you can hear it on air, but I was assured by the neighbors that it won't last very long. So can you? Great.
There we go. A little bit of hammer in there. It's like This Old House with Francine Lacroix. We welcome all of you here to the realities of the pandemic. And you're right, Francine. I mean, the pandemic is front and center, but there's a lot of other news. I would note Pacific Rim currencies continue strong.
Yeah, they certainly do. And actually, there's quite a lot going on also in pound, Tom. So let's not forget Brexit and the UK-EU relationship. Now let's get straight to the Bloomberg. First word news, here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. The Trump campaign is withdrawing a key part of its lawsuit against the election result in Pennsylvania. It's abandoning demands that almost 700,000 mail-in ballots be thrown out because observers were kept too far away from the count. The challenge is now against a far smaller number of ballots, almost certainly just a fraction of Biden's lead in the state. And President-elect Joe Biden is starting to meet national security experts, but his transition team is still being denied access to government officials in key departments. To prepare for office, he's relying on experts from the Obama era and people who've left government during Trump's term. In Germany, Chancellor Angela Merkel has failed to push through a slate of tougher restrictions to tackle the pandemic. She's postponing major decisions until next week after being unable to reach a deal with regional leaders. Instead, she's urging people to limit public and private gatherings. And 4 astronauts have arrived on the International Space Station after a 27-hour voyage on the SpaceX Dragon capsule. They'll now begin their 6-month scientific mission aboard the orbiting lab. It's the first time in NASA's history that a full crew has been ferried to the space station on a commercial vessel. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Let me look at the data right now. Equities, bonds, currencies, commodities. A churn to the market after the big day yesterday. Sort of what I call the anti-cyclical pay. Back to a little bit of a lift in the NASDAQ 100. Futures negative 12, Dow futures negative 63. We had a 22 handle on the VIX, 23.04 right now. Interesting to see how that develops through the week. In the yield space, well, churn to the markets there, a little bit lower yields, can't say much. And the dollar fractionally weaker, as Francine mentions. A lot of dynamics in sterling, and I would note again, renminbi out to new strength, 6.55 is miles from 7.00. Francine?
Yeah, Tom, look, a global stock rally that had powered hopes that the vaccine will bolster economic growth maybe paused today. Investors trying to weigh also the near-term spread of the virus. A couple of things that jump out at me. First of all, Tesla. Those shares pre-market getting some 12% after the car maker says, or, you know, after it was announced the car maker will join the S&P 500 index on December 21st. And then I'm looking at treasuries rising, dollar falling, WTI crude oil advancing, and the pound rising on optimism over a Brexit deal, Tom. So we'll have plenty more to talk about. Now, U.S.-China tensions took center stage on the first day of the Bloomberg New Economy Forum. The former U.S. President Bill Clinton urged Joe Biden's incoming administration and America's allies to take a more coordinated approach to dealing with Beijing.
We shouldn't accept or assume that it's all going to be bad without working to make it better. We got to try to, we got to give the new administration a chance to articulate an approach and then try to achieve, in cooperation with Europe and the United States and the international bodies,
Joining us now is John Norman, JP Morgan, head of cross-asset fundamental strategy. John, there's a lot, thank you so much for joining us, a lot to talk about. First about US-China, Biden administration, but just overall this vaccine. Is there too much optimism being priced into the markets right now?
No, I don't think so. I think everything that's come out of both the therapeutic front and the vaccine front over the first few months, so not just the past week, has generally come out better than expected in terms of the quality of the results reported by the major drug makers. So it is right to think about the vaccine as really sealing the case for this being the last major wave of COVID. And if you believe that that's the case, then you have to bet on a stronger global economy without a lot of volatility next year, and that's what markets are reacting to. So I don't think the medium-term path that markets are anchored by is unjustified at all. The shorter term path is different because we're starting to see increasing lockdowns in the U.S. One has to think this has an impact on growth. This is going to cause episodic drawdowns in risky markets, but I don't think it changes the direction of markets over the next several months.
John, what kind of recovery are you expecting once we have the vaccine?
I think once you have the vaccine, keep in mind that in the background, there's probably going to be more fiscal easing by the time the vaccine is actually deployed to the general public. So I think that's why 2021 is going to be a year where the global economy is printing above trend growth, why probably most DM and EM economies are printing above trend growth. Monetary policy will remain loose. Fiscal policy is a bit of a drag, but not enough of a drag to really pull growth below trend. I think that's a pretty impressive environment for financial assets. Yes, some of them are rich, but I think that richness just sort of constrains the upside next year as opposed to forcing asset prices lower.
John, you write hyper detailed notes at a professional level and institutional level. Let me take it back to the core question for institutions and for all of our viewers. What do you do with cash? How do you deploy cash in the land of John Norman?
So I don't think you should hold much of it simply because anytime the global economy is growing above trend, the bias on equity markets is higher. The bias on credit spreads is tighter. So, hands down, other financial assets, ex cash and ex DM government bonds are going to give you better returns than the safe stuff. That's the basic point of this. I think the question, though, is would you hold any cash at all? And I think you should, simply because many financial markets are extremely difficult to hedge in an environment where DM bond yields are already so low. So one cannot hedge with German bonds anymore, and there's a limited degree to which one can hedge with treasuries. So the only way to sort of limit one's risk over the next year is to have some residual cash position, even if it should be a small one. Maybe it should only be a couple percent in the portfolio.
John, I'm going to rip up the script and go all Bridgewater on you. Think of Bob Prince and leading this charge at Davos. It seems like forever ago. If bonds are useless as a hedge, if full faith in credit U.S. is useless as a hedge, has John Norman and JP Morgan come up with a hedge alternative, or is that essentially a constructive impossibility?
No, they're a bunch of second best alternatives. I'm not going to claim I have come up with them because they've been around for decades, if not even longer than that. So this is basic defensive assets in currencies like the yen or the Swiss franc. They're basic defensive assets in commodities like gold. And I still think treasuries have some residual value. They do not yield zero yet. They might only yield 90 basis points in 10-year U.S., but there is some scope for those yields to go down if the economy disappoints and the Fed extends the average maturity of its purchases. So bonds, I think, are definitely useless. So are JGBs. So are UK gilts. Treasuries have a lot less usefulness than they used to have, but that needs to be combined with some of these other defensive assets in currencies and commodities like the yen and gold.
John, where does the market find yield in 2021?
I think it's only in credit and emerging markets. Credit meaning high yield, high grade, I think has too much duration risk for an improving growth environment to make that a decent risk reward. So it's basically about high yield and probably EM local markets. I think there are still, if you have to find any central banks that are going to be easing policy next year, it's probably going to be those EMs that still have reasonably high real interest rates. Mexico, Russia, China, perhaps Indonesia. Those are places where people can earn yield and capital gains, but it's obviously just a subset of the fixed income universe compared to what people are used to thinking about as the yield options in this kind of environment.
John, overall, when you look at some of the dynamics of a Biden administration, are there sectors that will be hit more than others that we're not realizing yet?
I don't think so, because the Biden administration becomes hugely impactful on a sectoral basis if there's a Democratic sweep. So if the 2 Georgia seats went to the Democratic side of the ledger and the sweep dynamic became reality, then you could talk about regulatory changes and a number of changes on the environmental front that would amplify the rotation that's already going on because of the vaccine. But I think for most of 2021, the rotation that you're going to see is mainly driven by the vaccine. This is a global phenomenon, not a Biden phenomenon. And there's also a rotation that happens just from the global economy lifting. If you want to talk about something that really is going to endure beyond maybe the middle part of 2021 in terms of sector rotation, style rotation, I think that has to be based on a sweep, and we'll just have to see how the Senate races turn out on the 5th of January.
John, thank you so much. John Norman there of JP Morgan stays with us. Tom, can you hear that? It's quiet. It's quiet in the Lacqua household.
I
think
that.
The neighbors are watching Bloomberg. They heard you mention that they didn't, you didn't like all of the noise, and they stopped.
Or it's a union 3-hour lunch. It's probably a union 3-hour lunch.
Probably. Coming up today, during the Bloomberg New Economy Forum, Christine Lagarde, the ECB president, an exclusive interview that starts at 4 p.m. 4 p.m. in London, 11 a.m. in New York. There is actually maybe a new, gold escalator going, being built next door, Tom. I don't know. I'll look into it and I'll report back. But don't forget to watch the Bloomberg New Economy Forum today on the social channels, on Twitter, on Facebook, but also on the terminal. This is Bloomberg.
Expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. Lots on a Tuesday to speak of with the markets on the move. John Norman with us with JP Morgan. We've been talking here about some of the relationships, the correlations across asset classes. John, I want to cut to the chase, which is the great underestimation coming out of any crisis and maybe even a medical national disaster, is that people adjust. Is there a great adjustment going on now, which is massively, massively underestimated, that corporations adjust, governments adjust, indeed the public adjusts, and that leads to a better outcome outside the gloom?
I think it's too early to tell, but I think this will become a lot clearer over the next couple of quarters. And what I mean by that is companies have become arguably much more efficient about delivering whatever service they focus on through the pandemic. So they moved to greater efficiency through staff working from home. They've moved to a digital platform in many cases for delivering a service. And if you think there's some inertia in that change in the business model that's going to keep costs low in 2021, what we might be surprised by is how strong profits are and how much or how resilient margins are in 2021 as the economy picks up. So even if we don't see a pace of growth which is 2 or 3 times trend, we might see an above normal profits recovery and margin expansion because they've retained some of these more efficient business practices well into the post-pandemic era.
And this is an unfair question to you, but I'm going to go with it. And it goes over to Joyce Chang and maybe equity market analysis, but let's keep it in your space. Is the great adjustment that we're under a digital adjustment?
Well, it's a continuation of a digital adjustment for many sectors, and sort of an adoption of digital practices in a lot of sectors that weren't following that path previously. And my expectation is that a lot of that shift is permanent, that the pandemic basically forced businesses to do many of the things that they should have been thinking about anyway. And we'll probably see that benefit in terms of efficiency, which then gets reflected in margins and profits over the medium term.
John, what's your take on Europe? There was so much optimism after the Green Recovery deal, and now questions about exactly, how much money will be deployed and when. But there seems to, what exactly happened on European assets and Euro specifically?
Well, I think there's been, first of all, a second wave in Europe, which came much more intensively than people would have expected. Everyone would have expected that Europe would experience some measure of a second wave in the fall, but the vigor of that was kind of beyond most people's projections. This is why you're probably going to see significant underperformance of the euro area economy in the current quarter versus other parts of the world. That hasn't had a very durable impact on markets. That was basically a phenomenon that affected the euro and also European equities in the month of October, but not in the month of November, basically because the vaccine success has really supplanted that. So I don't think there's a huge amount to differentiate European from U.S. markets going forward, mainly because the vaccine dynamic is so dominant that it's lifting all boats, even if over the short term, there's a pretty big gap between where European growth is going to be this quarter versus what it's going to be in some other parts of the world. So, Europe has gotten pretty lucky or European markets have gotten pretty lucky that the vaccine story is really driving everything currently.
Have UK assets been oversold? We could have a deal. It's unclear how negotiations are going, but they seem to be more on the positive side today.
I don't think they're oversold because UK assets are basically need to reflect the reality that even a skinny deal between the UK and the EU is a hit to long-term growth. It's not as big a hit as a no-deal scenario would be, but it's a markdown nonetheless. So I sort of struggle to see the outcome from the Brexit negotiations, which is going to cause a significant upgrade in UK growth relative to the rest of the world. If you see an upgrade in UK growth, it's because there's a common phenomenon, which is joint monetary easing or fiscal easing or vaccine developments. But I don't see an idiosyncratic, pro-UK market phenomenon developing in the next year.
John, to get out front of the year end and look forward notes that are going to be written, and I don't mean a JP Morgan call, but I'm just fascinated by where you calibrate where the euro is too strong or the yen is too strong. Do we grossly underestimate how quickly governments are going to adapt to stronger currencies off weak dollar?
No, I think there's central banks who historically have used verbal intervention much more than actual intervention to resist currency strength. So the G10 central banks tend to use verbal intervention much more than actual intervention. That's why if a currency appears expensive or it appears strong, I don't think of that as necessarily a constraint on further appreciation. If the currency we're talking about is a G10 one, I think it's highly unlikely that the central bank is adjusting monetary policy currency are undertaking FX intervention in order to resist that trend. So, I feel like the intervention debate is really one that's very much about EM central banks and mainly EM Asian central banks.
John Norman, thank you so much. Greatly appreciated. Always a wonderful brief here. He is with JP Morgan, head of cross-asset fundamental strategy. Futures -14, NASDAQ futures a little green, red and green on the screen as well. Dollar fractionally weaker. On central bank discussion, what a wonderful effort by Stephanie Flanders yesterday at the New Economy Forum with leading central bankers. Let's follow that at 10 a.m. with a leading central banker, Alan Blinder of Princeton University. Stay with us worldwide. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Tesla is joining the S&P 500 next month as its largest ever new member. It follows months of speculation, which helped the company's valuation skyrocket to almost $390 billion. It will be one of the index's most influential members, with a weighting similar to that of Berkshire Hathaway or Johnson & Johnson. Airbnb has filed for its IPO, outlining widening losses and plunging revenue due to the pandemic. But it is projecting optimism for a rebound in demand when the economy does recover. The listing is set to be one of the biggest this year. Sources tell Bloomberg the company plans to raise as much as $3 billion. And EasyJet is extending the terms of its UK government-backed loan. That's to bolster its liquidity in the face of new lockdowns in Europe. Britain's biggest discount airline is posting a loss of over $1.1 billion for the year through September. It plans to fly no more than 20% of its usual capacity this quarter. And that is your latest Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, we're just getting some breaking news, and this was a little bit priced in the markets, which is why we saw pound move, but we understand that Brexit negotiators are very close on a trade deal. We understand that they're zeroing in on a trade deal as early as next week. Now, of course, we still have to see the biggest sticking points and whether that will actually go through. Talks are continuing in Brussels, and again, officials are now planning for the possibility of a breakthrough to be announced as soon as next Monday. I know, Tom, the sticking points are fisheries and fishing waters. That's one of the most thorny topics, so we'll see what's decided on that, but that's mainly the data check. That's what I want to show you is pound and then a little bit of movement on European stocks.
You know, a bunch is right up against sterling strength on dollar. Dan Tillis tells me about euro and sterling, and of course that relationship not quite as enthusiastic, where euro sterling's got some real run to move to get through resistance at about 0.89. Michael Pence, or I should say the Vice President Pence, to get through 0.895 on euro sterling as well. Coming up away from Brexit, William Dudley of Princeton University with Alan Blinder. William Dudley, the former head of the New York Federal Reserve System, on the mysteries of our central banks. Stay with us. Futures -14. This is Bloomberg.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
The notion that the Fed can do all that is required at this point to support the economy is just wrong. And the Fed is really pleading for fiscal relief. I believe it's essential.
The big thing was preventing a financial collapse. The central banks acted definitively to do that. That's all that was ultimately historically important. The mistake is for them to vastly exaggerate their continuing relevance. They lack, starting at the zero bound where we are, the capacity to provide meaningful impetus to their economies in any way that is consistent with any concept of central bank functioning. They do not have the capacity to meaningfully affect the degree of inequality. They do not have the capacity to vaccinate people. They do not have the capacity to fight climate change. And they need to acknowledge the limitations of their influence.
It should have been a 1-hour panel yesterday, maybe even an hour and a half. This was a powerhouse of central bank thought, and you get that with Stephanie Flanders of Bloomberg News, our senior executive editor for Real Economics. Stephanie Flanders joins us now. What I love, Stephanie, is you went right to old world balance sheet dynamics. We don't do that in America. It's a very British thing about saving gluts tied into weak loan demand. It's the opposite side of the American dialogue. What do these esteemed people say about the fact is people are scared stiff, there's a savings glut, and there is weak loan demand?
I thought it was really striking, Tom. I mean, you'll remember Larry Summers, who was on the panel and was talking there about the limitations of central banking, has been banging on for a while about secular stagnation. And the core of that thesis was that you had this huge amount of this glut of savings sloshing around the world in search of a shrinking amount of real investment opportunities, and that was at the heart of financial instability, inequality, and the relatively slow growth we've had all these years. What was striking to me is, I've heard Larry say that a million times, what we had on this panel was Janet Yellen come very strongly agree with him that was the major macro issue. Raghu Rajan, the former head of the Indian Central Bank, saying the same, and Mervyn King, the former head of the Bank of England. They had slightly different views about what the best response was. I think the focus was on fiscal when it comes to Janet and Larry Summers, more than perhaps some of the others. But I thought that was very interesting. If you'd heard that a few years ago, you would have thought, wow,
right.
The argument has moved in the direction of Larry Summers.
How close are we, Stephanie? And not only your esteemed panel, we talked to Governor King about this, The End of Alchemy, one of the great books out of the disaster we're in. Stephanie Flanders, how close are we to the land of Clement Attlee? How close are we to wage flattening or even outright nominal or real wage deflation?
You know, I think it's in different places we're seeing different things. I mean, the search for inflation and certainly wage inflation, has been on for years, and we thought we were going to maybe start to see it more this year, and then we had the pandemic, we had the crisis. I think what is going to be, I think, a focus, and one of the things we tried to get into in the panel, is whether central banks can make clear to people that is what they're focused on. They're focused on the main street, on wages and on livelihoods, and not so much on Wall Street, which is, of course, the dynamic we've seen so much about them propping up stock prices.
Stephanie, good morning. How much power do they think central banks have left, or how much of a toolkit do they still have?
These are all people who've talked repeatedly, Lord King particularly, about the limits of central banks and how they can't do everything. In some sense, you would say that was recognized this year in the fact that it was really government fiscal firepower that came to the rescue in the crisis for the pandemic, and it was central banks that kind of underwrote that, made sure that they could actually fund it in the markets by expanding their balance sheets. So I think there's a recognition now that it has to be a two-sided thing, but all of them are pretty concerned that we still look first to central banks to solve all our problems.
But why are they not worried about the explosion of debt?
Yeah, it's funny. It didn't come up once, which it wasn't that long a panel. But if you look at the numbers, you might be surprised. It was striking to me, perhaps the absence of concern around that, and we've seen at a global level. Although actually the exception to that is there was a lot of concern from Raghu Rajan and others about emerging market debt, and I think there is a growing concern about what this pandemic in the end is going to do to private and public balance sheets in emerging markets. But as from the advanced economies, they just don't think that's the priority. And people like the International Monetary Fund would agree with them on that, with the cost of borrowing so low.
I look, Steph, at where we are in central banking, and there's just so many different ways to go here right now. Let me give you an open question, which is simply, what is your outcome for the linkage of fiscal and monetary policy for 2021? I know you're going to tell me each nation is different, but just what is the view of how central bankers, as the adults in the room, nudge or direct fiscal policy?
Well, you heard Janet Yellen there talking about that in a very explicit way. Look, the linkage is pretty clear when you just do the numbers. We've had our economists of Bloomberg Economics look at the amount of extra borrowing you've had by governments this year as a result of the pandemic in the advanced economies as a share of GDP. And you just compare that with what their central banks have done in terms of expanding their balance sheet, in terms of quantitative easing. The numbers are remarkably similar. Now, every central bank you talk to says, oh, we had our own reasons for doing this. We were looking at financial market functioning. We just ended up in in effect, helping to finance all of that extra borrowing. But I think that's what you're going to see going forward is actually, in the end, quite a lot of coordination between the fiscal and the monetary, but a desperate effort by central banks to defend what they're doing on their own merits and not as some kind of loss of sovereignty or loss of independence. Right. See why they would do that.
Real quick, Stephanie Flanders, did you talk to Janet Yellen? Is she our next Secretary of the Treasury? Anything you want to break here?
She wouldn't give me an answer to that. My own bet is that her skill set was better served at the Fed, but who could say? I think she's obviously in the mix, but there's plenty of other strong candidates, and she was. I do think she would be, for my personal opinion, she's better suited to the Fed.
Stephanie Flanders, thank you so much. Of course, a wonderful panel yesterday on central banks. We're going to continue here with Steph running all of our economic shop worldwide. Futures at -14 right now in New York City. Our first word news. Here's Ritika Gupta.
Thanks, Tom. President-elect Joe Biden says containing the coronavirus pandemic is vital to the economic recovery. He's vowing to spur a rebound in 2021, but also urging Congress to pass a stimulus bill this year to deliver immediate relief to Americans. Biden says it should be like the $2.2 trillion HEROES Act already passed by the House. The general outline of a future trade deal between the UK and EU is clear to both sides. That's according to Ireland's Prime Minister. But he's warning it's not yet clear if his UK counterpart Boris Johnson truly wants an agreement. The UK says it wants to see realism on the part of the EU in the talks. And flexible working could be the solution for businesses struggling to recruit women into senior roles. That's according to a new study by Zurich Insurance. Women applying for management jobs jumped 20% after the insurer advertised the roles with part-time and job share options. As a result, the number of women hired for senior positions jumped by a third. And the strongest storm of hurricane season has hit Central America. It made landfall late Monday in Nicaragua, bringing catastrophic winds and torrential rain. Now 105 miles per hour, its winds are powerful enough to cause deadly mudslides and trigger a humanitarian crisis. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. This will be the interview of the day for Washington. Within the headlines, there is one telling reality. The risk of the House for Speaker Pelosi, the battle of moderate Democrats and liberal Democrats. With us, Brendan Boyle of Pennsylvania. This is Bloomberg. Good morning.
how many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
Order placed to sell short Japanese yen at 104.360. I'm placing an order to sell short Japanese yen at 104.360.
That won't be easy.
But unless there is some basis for some cooperative action, the world will slide into a catastrophe.
But what I do believe both sides are capable of through the highest level diplomacy at an early stage of the Biden administration is to define the parameters.
We should build an open world economy that works for all. We must firmly safeguard the multilateral trading system under the WTO and unequivocally reject unilateralism and protectionism.
When your economy becomes, so big and your interests are all over the world, you have to protect your own interests.
The American administration is about to change, but the clock will not simply be rewound.
I hope that he will be able to focus his mind on developing a framework for an overall constructive relationship with China, because the last 4 years have been quite a tumultuous ride.
Unfortunately, some forces are acting against the trend of the times. They have trumpeted the decoupling and willfully walked away from international commitments, posing challenges to multilateralism.
I don't think we're going into a world of deep protectionism going forward. I see more regionalism.
Some of the top business and political leaders speaking on the future of the U.S.-China relations at the Bloomberg New Economy Forum. Now, later today, also at the Bloomberg New Economy Forum, we speak with the ECB President, Christine Lagarde. That's at 4 p.m. in London. That's 11 a.m. in New York. And certainly the ECB having many challenges on how to recalibrate monetary stimulus after the second wave of the pandemic. Let's get back to Stephanie Flanders, Bloomberg Senior Executive Editor for Economics. He's still with us. Stephanie, thank you so much for staying with us. How does the ECB recalibrate given the challenges ahead?
I think that what they're looking at is how much they can, and what's interesting about what we've heard from Christine Lagarde recently is a sort of rejection of the idea that their existing approach needs to be completely retooled. She would argue that there is scope for them to continue to use all the instruments, including the new instrument for bond purchases that they've introduced this year. A little bit of skepticism about that, given the scale of the challenge, where you look at where the inflation forecasts are now, where they're expected to be, even if the Eurozone bounces back from this second wave of shutdowns, as we hope and expect.
But Stephanie, if you look at the vaccine, will it come too late to actually, support the economy? How much more damage can we see on a lot of these European economies? And is there anything more, apart from cheap credit, than the ECB can do?
I think they are going to have to think again about, or at least continue the conversation around fiscal support. We do have the recovery. I mean, one thing that's good about the timing is that it's been sort of very fast by EU standards, but still not actually getting the money out of the door yet, that 750 billion euro recovery fund. For some of the key economies, some of the worst affected economies, particularly in the fringes of the Eurozone, that is going to be a big boost as a share of GDP if they can get the money out of the door into those projects. So I think that the focus will shift there and on what they're spending the money on. Are they putting it into things that will support growth, not just hold the economy together or hold it in standstill? And I think otherwise, governments are going to continue to be under pressure to keep up these sort of job support programs. But with any luck, we will see a bounce back at the end of the year from the lifting of restrictions. Most countries look like they are on course to have at least a partial lifting.
Stephanie, it is 15 years on. I can't believe I'm saying that. 15 years on from Dooley, Folkerts, Landau, and Garber's seminal paper on international adjustment. They didn't write that paper at the negative bound. How does Lagarde, how does Europe adjust with negative interest rates? I don't see it in the textbooks, and I don't see it applied. How do they do that?
Well, partly through the fiscal, and that's why the recovery plan is so significant. If we end up with a form of risk sharing, a form of fiscal policy, if you like, European fiscal policy, we're going to have European EU-funded bonds to support part of that plan. Then we start to see a capacity to adjust. I mean, you're right. There isn't the countries by themselves, without control of their own currencies, are going to struggle to come up with enough impetus, enough impulse. But with the support of that plan, well, maybe you can chart a course. But it doesn't suggest that the ECB is going to be able to start moving back to normal anytime soon.
Yeah. Stephanie, given where
Short position open on Japanese yen at 104.360.
2021, we'll see negative rates in the UK.
You know, we've had a little bit of pushback from the Bank of England just over the last few weeks. I mean, they would claim that they have done their duty in doing the due diligence of going through what is, I think, they're still in the process of doing their market review. They don't think about whether or not they can do what the implications for markets and for financial institutions would be for negative rates. I don't sense it's on the near horizon. They've known about the adjustments to the non-transition era of Brexit, the kind of proper Brexit in January, for a long time. We know that's going to be a jolt. Even with a deal, we know there's going to be a big jolt because it's a big change in trading conditions. I don't see it in the very near term, but it is clearly part of the toolbox if you're looking further ahead, if they really struggle to pull the UK out of this.
Stephanie, thank you so much. Our Stephanie Flanders, our Bloomberg Senior Executive Editor for Economics, joining us this morning. Now, also join us a little bit later for more of the Bloomberg New Economy Forum. We have great guests, including the Indian Prime Minister, Narendra Modi, Banco Santander Chair Anna Botin, Ray Dalio of Bridgewater, and you can watch all of that live on Bloomberg.com, on the Bloomberg Terminal, or of course, Bloomberg New Economy's social channels on Twitter and Facebook. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
But what is very important with today's news is we can now, for up to 30 days, have a vaccine stored in a regular fridge at 2 to 8 Celsius, like you do insulin. And as you know, every pharmacy, doctor's office, hospital has that capability. So we think it's a very important game changer. The other piece too, to keep in mind is our vaccine does not require dilution.
And the joy of vaccines. Yesterday, a conversation with its chief executive officer of Moderna. What we know is, well, there's 2 vaccines out there, many more to come. We need to step away from the vaccine frenzy, what it's clearly done to the markets, and speak with Dr. Fazeli right now of Bloomberg Intelligence, just wonderful on pharmaceuticals, the pharmacology that we're looking at. Sam Fazeli, I want to move away from Moderna and Pfizer to the other kinds of vaccines. From where you sit, is it the land of messenger RNA and this new science, or can more traditional vaccines be part of the game forward?
Good morning, Tom. Well, yes, they can. At the end of the day, we need to see how these vaccines all behave over the longer term. And we won't have enough doses from Pfizer and Moderna. At max, we'll have about 2 billion doses by the end of next year. So that falls far short of what's needed globally. So we do need other vaccines, also in case the longevity or the durability of these other vaccines, or the Pfizer and Moderna vaccines, aren't as good as what we would hope to see, and perhaps other vaccines are needed to come and boost that up.
How close are we to those other vaccines? Are we going to see spectacular joy and announcements, or is it a long slog ahead within traditional adenovirus and other vaccines?
Yeah, so the adenoviruses from AstraZeneca and Johnson & Johnson, I just put out a note this morning saying that I'm a bit worried about the Astra trial data that we're expecting by the end of this year from the UK and Brazilian trials. The US trials just kicked off, so has Johnson & Johnson. So that data will be in the first quarter, but of course the infection rate's so high that we might get that a bit earlier than we would have done before. And then beyond that, we'll get the more traditional vaccine data. So there's still more to come, but obviously Pfizer and Moderna have set up a pretty high bar.
So Pfizer and Moderna, Sam, I mean, if you have 2 vaccines that have such, great trial data, is it quicker to distribute? How are these 2 vaccines actually different?
Well, they are actually a lot more similar than different. They use very similar technology. That the piece of RNA that they use is pretty similar. So, and the fact that one needs a slightly lower temperature to be kept at is probably because they haven't studied it for as long, and over time that might evolve. So we just have to wait and see how they differ in the longer term in terms of their durability or any other details, such as which one's better for older people, etc. But I'm going to assume until we see something different that they are going to be pretty much the same.
Sam, what are some of the questions that you still want to know about these vaccines? If you look at the markets, they're very optimistic that we go back to normal, maybe early to mid 2021. Having a vaccine, what are the questions that we don't know? Can you still pass the infection even if you take the vaccine yourself? What are the other things that we should be thinking about?
Yeah, Francine, the list is a bit too long for a short TV hit, but you've just hit on one crucial one that you've just mentioned, and that is, if you're vaccinated and you don't get symptoms, are you still infectious? That's something that has to be worked out, and unfortunately, I don't think the trials as they are today from Pfizer and Moderna are designed to answer that question in detail, so someone else needs to study that. And then, of course, is how long does immunity last? If I take my jab today, am I good to go for the next 1 year, 2 years, 5 years, 10 years?
We learned the complexity of this from Sam Fazeli. Sam, just treasure. Thank you so much with Bloomberg Intelligence this morning. Futures negative 16, red and green on the screen. A little bit of a lift to the NASDAQ right now. The VIX shapes up, coming in from a 24 level to 23.10 with a 22 handle yesterday, showing the good markets. Let me give you the level on the Dow futures, 29,768, a real dash to 30,000. Yeah, we're on the 30,000 watch, I'll admit it. Bonds come in a basis point, really not much action there, 0.89%. Curve flattening, the real yield, well, negative 0.86% there. We'll have to watch that carefully. Sterling, we're watching, of course, off that Brexit headline. Francine Lacroix mentioned 1.3243 as well. On the application of central bank theory to fiscal markets and also to the interest rate market, Christopher Rupke will join us with MUFG. It'll be a good time to catch up with him. Stay with us. From London, from New York, this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there's a Google problem in this country.
This morning, there is no room at the hospital. The constraint is not cases or deaths. The constraint is exhausted nurses and doctors. Sweden will make a, quote, unprecedented response. Philadelphia is closing high schools. Iowa will limit gatherings, spiritual gatherings accepted. Markets, they're spirited. Dow 30,000, it is in sight. Pacific Rim currency strengthen. And Donald Trump is his own Secretary of Offense and Secretary of Defense. He wants to, quote, strike Iran and withdraw troops from Afghanistan and Iraq. and Somalia. Good morning, everyone. Bloomberg Surveillance from New York, from London. Tom Keene and Francine Lacroix. So much to talk about as well. The news flow at this moment is really quite extraordinary. We're expecting Home Depot earnings. I see same-store sales for Home Depot up a pandemic number, 24.6%. I don't believe that number. We'll have to see if that's true. It's truly an unbelievable number. And Francine, these are seismic announcements from Amazon where they dive into the competitive field of how we get our pharmaceutical drugs.
Right, Tom. So this is what I'm seeing. This literally breaking out moments ago. Amazon is expanding its push into healthcare with this online pharmacy. We understand that Prime customers will be offered fast delivery and discounts for medicines. And this is a new digital drugstore that could come after the acquisition of PillPack in 2018. This could be huge news, Tom, given the fact that Amazon is so big and has so many strides that, the fact that it's pushing into selling prescription drugs is launching a digital pharmacy could be a real game changer for healthcare.
Yeah, as well. Now, we've got this story. We're going to drive this forward, and this is a huge announcement, widely anticipated on the street. Within the blur that I saw from Amazon, I would suggest, folks, the key thing is non-medical. It'll be interesting to see the cash discounts they will have to compete with Walgreens, CVS, and everyone else out there. That's a seismic announcement on pharmacology from Amazon. Meanwhile, on Home Depot, obviously a bellwether for the American economy, and the same-store sales say it all. A nice outreach there. Tanya, give me the stock price if you can on Home Depot pre-market. It may be too early in the morning really to get that as well. Average ticket up 10% is all you need to know. That's a key metric for Home Depot. Francine, I'm influenced by Home Depot being directly below me. I think I'm just above tools, power tools here at our 731 Lexington studios. But Home Depot, Francine, says so much about the pandemic.
Yeah, it does. And we saw a similar trend here in the UK.
I'm moving my stop on profit for Japanese yen to 104.310. Okay.
All the people that are at home, Tom, and I know I'm in London, but I can really hear it around me, as so many people doing improvements to their home because it's more convenient and we spend so much time more, at home and indoors. But that figure from Home Depot, third quarter comparable sales up 24.1%.
Yeah, the shoe extension to Francine Lacroix, that construction that we heard an hour ago, all of that backed by Home Depot.
I wish, Tom.
Francine, I really want to point this out because I think it's so important, folks. Apple, Amazon, Apple, tech, and all that. Home Depot, 10-year track record, up 27.3% per year. And that's a lot of sexy response from selling construction equipment and power tools. Home Depot out, and we'll continue to follow that story and the Amazon story as well. What a news day with our First Word News in New York City is Ritika Gupta.
Morning, Tom. Francine. The Trump campaign is withdrawing a key part of its lawsuit against the election result in Pennsylvania. It's abandoning demands that almost 700,000 mail-in ballots be thrown out because observers were kept too far away from the count. The challenge is now against a far smaller number of ballots, almost certainly just a fraction of Biden's lead in the state. President-elect Joe Biden is starting to meet national security experts, but his transition team is still being denied access to government officials in key departments. To prepare for office, he's relying on experts from the Obama era and people who've left government during Trump's term. In Germany, Chancellor Angela Merkel has failed to push through a state of tougher restrictions to tackle the pandemic. She's postponing major decisions until next week after being unable to reach a deal with regional leaders. Instead, she's urging people to limit public and private gatherings. And 4 astronauts have arrived on the International Space Station after a 27-hour voyage on the SpaceX Dragon capsule. They'll now begin their 6-month scientific mission aboard the orbiting lab. It's the first time in NASA's history that a full crew has been ferried to the space station on a commercial vessel. Global news 24 hours a day on air and a Bloomberg Quick Take powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. Short data check here. We've got to get to Kevin Cirilli. Futures red and green on the screen. I'm looking at Pacific Rim currencies stronger today. The VIX, 23.08. Francine?
Yeah, Tom, overall, look, a global stock rally powered by hopes of a vaccine is just taking a pause, and then pound here in the UK gaining on signs that Brexit negotiators are nearing a breakthrough.
Very good. As part of our new economy forum, it is always good to speak to former presidents. Here, William Jefferson Clinton.
We shouldn't accept or assume that it's all going to be bad without working to make it better. We got to try to, we got to give the new administration a chance to articulate an approach and then try to achieve, in cooperation with Europe and the United States and the international bodies.
Bill Clinton, always a pragmatic person. We learned that over his very successful presidency over 2 terms. Kevin Cirilli joins us now, the pragmatic one from Pennsylvania. Kevin, I want to take your Pennsylvania knowledge and fold it into where we are right now, which is Speaker Pelosi and the gentleman from the 2nd Congressional District, Mr. Boyle, who we will speak to on surveillance today, in middle-of-the-road Democrats dealing with the liberal left, as they would say on Fox. How petrified is Speaker Pelosi, and for that matter, Congressman Boyle, of losing the House?
You know, over the next 2 years, I think that there's definitely this baked-in optimism amongst Republicans that I speak with, Tom, about that they are on the cusp, from their point of view, of a resurgence of sorts in the 2022 midterms. I can tell you that people like Congressman Brendan Boyle, as well as other more moderate progressives in the House of Representatives and suburbs all around the country, feel that they have been really muted on their microphone as a result of a lack of digital advocacy in their wheelhouse. And they feel that the reason they've been able to make gains in the past several years previously in the House of Representatives is because they ran as more moderates, because the AOC model wouldn't work in the suburbs of major cities. That's just what they believe. And so it will be fascinating to see whether or not that tension is going to still be on display. But President-elect Joe Biden has made clear, based upon the names on his transition landing teams, for example, that he is much more looking for a pragmatic approach in some of the more stabilized departments like Treasury, for example.
No, obviously a vice president sings from the same hymnal as a president. I mean, that's what you do when you're in Washington. How close is Senator Harris to the congressman from the 2nd District versus the left? You know, I mean, Fox and the rest of them will say defund the police is the hot button, but there's a lot of other hot buttons. Where does Senator Harris as vice president fit into that mix?
More progressive. And when I talk to sources, especially moderates in the Democratic Party, what they are telling me is that they fully expect her to be the more progressive avenue, so to speak, for many of the policy prescriptions and proposals that she's going to have to navigate and that she's going to have to look at. It will be very interesting to see who becomes the negotiator in chief, so to speak, on Capitol Hill, because President-elect Joe Biden does have deep relationships with older members of Congress, especially, obviously, in the Senate. Look no further than Leader McConnell. But Vice President-elect Kamala Harris has relationships with the younger, more newer members of the Senate and of Congress. And so how they're able to navigate that and who will be negotiating, for example, the stimulus push or infrastructure push that they're going to be following through, that's the first thing on my radar for the first 100 days.
Kevin, you know, when will President Trump concede? Are people in the States concerned about when he'll concede, or does it actually make not that much difference?
Well, the markets haven't blinked upon the various developments, the legalities within Pennsylvania, another withdrawal of some of the lawsuit. Look, I think that here in Washington, D.C., Republicans that I speak with are rolling their eyes at best. and in other times just shrugging their shoulders. But they do view it as a potential political asset in terms of strategy, Francine, for politics, especially ahead of the runoff elections in Georgia in the first week of January. So it's getting a reaction, but not it's not viewed as a hindrance, so to speak, on folks being able to go about their work in this lame duck session.
So the transition, Kevin, will be put in place. I mean, we were discussing yesterday with Tom whether, at some point there'll have to be legal challenges to force the transition from the Republican side to go into place. Is that slowly becoming easier to manage?
Here's what I'll say. I talked to sources last week at the State Department, and I asked them about this notion of the transition. As is typical every go-around, staffers prepare binders, transition binders, for their predecessors. And so it can be utilized for both individuals who are going to take their job if there is a second term, but also obviously the handoff for other individuals if it's a new administration. That work typically takes months and is started at the end of the summer, and that is precisely what members at the State Department have already begun preparing. And so in that regard, they're on track for that. I think the pomp and circumstance of a public transition, which is a staple and a historic, sobering tradition in the United States, that's where there's the biggest question mark at this point.
Kevin Cirilli, thank you so much. Our Chief Washington correspondent. We've got much more coming up here. Of course, the news from Amazon as they dive into a widely anticipated pharmacy, maybe a drugstore, by mail, by cardboard box as well. Home Depot out with earnings. On the central bank story on monetary theory, Alan Blinder will join us at Princeton, the former vice chairman of the Federal Reserve System. Red and green on the screen. Futures at -20. This is Bloomberg. Good morning.
Better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The notion that the Fed can do all that is required at this point to support the economy is just wrong. And the Fed is really pleading for fiscal relief. I believe it's essential.
My favorite panel that we've seen.
I'm moving profit, stop on profit for Japanese yen to 104.260. Okay.
Into the equations and look at the dynamics. And the dynamic is the desire and the demand of investment just isn't there. What have you learned?
Yeah, it's, well, we were kind of worried about this, right? I mean, theoretically, if companies are missing a few months of sales revenue, how are they going to go out and be anxious to buy new equipment for the future? So at the moment, what's happening is that they are making some investment, but they're not really spending on structures. They're not spending on new factories. They're not spending on office space, not as much warehouses, and especially they're not doing oil and gas drilling structures.
The textbooks tell us that the greatest variability in a slowdown comes from the investment side. Great. What have you gleaned from a natural medical disaster? Is it the same as a recession, or is the investment dynamic, the negative aspects of it, is it different in a pandemic?
Yeah, it's very interesting. I mean, it is fair, I think, to call this a pandemic recession. You know, we're going to get industrial production later today, which kind of defines the business cycle for over a century. And it fell for 2 months, and then it hit bottom. So the recession should have been over in April and May, theoretically, based on this number. So it's very much COVID-based, and I'm going to be very interested to see retail sales today. It's October. I'd rather see November data, but October data for retail sales, we want to see if this second wave of the virus spreading, is that going to bring down actual spending on the part of consumers?
Chris, good morning from London. If we do have a vaccine that's workable and distributed to enough people globally by, let's say, the end of the first quarter of 2021, how much does that limit scarring to the economy?
I think, I mean, usually we use, I just heard Janet yelling in the background on your program. And yeah, the scarring tends to be, and she's brought this up before, the scarring is that the job losses become more permanent. People are out of the labor force. Their skills grow rusty. Now, people have just lost their jobs in the last handful of months here, so I don't think they're losing their skills right now. But, yeah, it would be important if the virus can give people confidence so that the social distancing measures can be dropped and we can go back to normal. I'm still hopeful. I'm going to be back in New York City in my office this time next year.
But how will, what are the changes that will remain post-COVID? Like, are we underestimating? There seems to be an assumption that we go back to what it was like in, at the end of 2019. What changes?
Yeah, I think, people, the airlines are a good measure of this, and they're saying business travel, for instance, our people travel all over the country, I do as well, that business travel is not going to be coming back as quickly. I don't know if I buy that. The only thing that kind of worries me here is that, stock market valuations are very high, 28.4 for the PE ratio of the S&P. I'm worried that people bought these 5 stocks that are 20% of the S&P. The reason they bought the 5 stocks, Alphabet, Amazon, Apple, Microsoft, Facebook, is that we were going to be at a stay-at-home economy. Well, what if we're not going to be at a stay-at-home economy this time next year? Just something isn't adding up here in terms of the stock market's lofty valuation.
Chris, just very quickly, I mean, we heard this morning that Amazon was going into the pharmaceutical world. I mean, does that not put a lot of the pharmaceutical infrastructure at risk? Are we underestimating some of these big shifts to technology?
Yeah, that was very interesting. I don't know. I mean, again, we're going to see internet sales, so-called, as part of retail sales coming out this morning. I think can the traditional means of buying commodities, consumer buying goods. Is that going to change due to these new companies? I think it's a little bit slower than you think here. I was just looking back at internet sales as a percentage of retail sales were 13% a year ago. Now they're 15.3%. I mean, it's only made 2 percentage point inroad here. Maybe it's going to be slower than we think. There'll be other natural barriers to stop this disruption, if you will.
Chris, thanks so much. Chris Rubke there, MUFG Union Bank Chief Financial Economist. Now, coming up, we'll have plenty more on central banks and scarring with, of course, Christine Lagarde, an exclusive conversation for the Bloomberg New Economy Forum. That's at 11 a.m. in New York. That's 4 p.m. in London. You can watch it live on Bloomberg, but also Bloomberg.com. This is Bloomberg.
When you went to Baltimore, you went initially to be an
anchor woman,
anchor woman, and then it didn't quite work out.
Yeah, I got fired.
Well,
well, demoted. I was
got demoted, but they didn't. They had a contract, so
Yeah.
they didn't say goodbye. And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25." Then you're 30. So I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000.
Right.
So they kept me on and said, "We'll put you on this talk show just to run out your contract."
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London, Tom Keene in New York. Francine knows it is different in the United Kingdom. It is different worldwide. It is different in Canada. There is the American pharmaceutical system. I'm not expert at it. All I know, like you, we have to deal with it each and every day. Drew Armstrong is expert at it with Bloomberg News. He usually gets up at the crack of 9 a.m. We've dragged him out of bed this morning on this huge, widely anticipated announcement that Mr. Bezos and Amazon, after the PillPack acquisition, want to be America's drugstore. CVS down 5% on the announcement. Drew Armstrong, this has been widely anticipated. What happens day one for Mr. Bezos and Amazon?
Yeah, I mean, as you point out, Tom, Amazon has been thinking about this for years and years, and at the same time, the major drugstore chains have been freaked out about it for years and years and years, and you've seen that reaction in their investors as well. Amazon has gone after every other part of the drugstore, and it always felt inevitable that they would go after the prescription counter in the back, and I think this makes that as final as it can be. Day one, I think you're going to start seeing how many people want to just go ahead and integrate their prescription drug shopping into, ordering stuff online in the U.S. like they have been doing, I think, in the middle of the pandemic in greater numbers than ever before. Doing this now, I suspect, will end up being a pretty savvy move by Amazon because, people are in the middle of more lockdowns. It's in the middle of people not wanting to leave their house. And if you ever had a reason to, one more reason to stay home and do stuff online that you don't have to go to a store for, especially if you're on, a lot of different drugs or something like that, and you might not want to be out around other people. This is it.
Okay, I totally agree with you, but to me, it's so much about price and the fury that older people have about drug costs in America. I just went in and signed up for this thing, folks, like everybody else is going to sign up. I had to tell, I lied the entire way through, Drew. I said I was healthy and all that. Drew, the first thing Amazon wants to know is what state I'm in. Is it your understanding that this can be a national effort, or are they going to be blocked by selective states?
Yeah, I was just paging through to just see exactly where they're available. The reason that they're asking that is because to operate, you need, to be in the pharmacy business, you need a state pharmacy license. This is a state licensed business. And so, you have to actually have the ability to do that. The PillPack acquisition, as well as some of the efforts Amazon has taken subsequent to that, they've been going out and doing the state licensure process over the last several years. I think there have been a number of reports of them going out and making sure they're okay to operate. So it looks like they're available in just about everywhere. I haven't gone through every last state to check that. But, yes, this is going to be a business that I suspect a lot of people will pick. Price will matter, but they're also going to go after insured customers. I think it'll be interesting to see what happens with those folks who actually, need to go and speak to their pharmacist and like to go and speak to their pharmacist, and how they work around that. PillPack has done a lot of that business by phone, but there's people who like to be able to go and and visit with their pharmacist and see their pharmacist and talk to their pharmacist and check on their medication. Obviously, again, though, with the pandemic, I suspect a lot of that has been curtailed, and that is a moment of opportunity for Amazon.
Drew, the media was disrupted. If you look at hotels, it was disrupted. Travel was disrupted. The healthcare seems to be the last bastion of industry that has not been disrupted yet. Is this just the first wave of disruption for pharma and health companies?
I think it is going to be interesting to see whether this represents a broader entry into trying to shake things up in healthcare or an opportunity to pick around the edges. We've seen lots of people who have looked at opportunities to pick around the edges, but run into plenty of trouble when they try to disrupt healthcare more broadly. And, you can put Amazon into that second bucket as well. Remember, they had that effort with JP Morgan and with Berkshire that they were going to hire, a tool go on day and have Haven Health and start remaking the health system. And it appears to have gone absolutely nowhere. It is very, very, very hard to truly disrupt healthcare in a meaningful sense once you get into the area of, hospitals, doctors, insurance plans, where a lot of the real money is. Drugs are a chunk, but they're, around 10, maybe 15%. So this may be just the case of something that this is the last retail. Think of this rather as the last retail item that they were going to go after than the first healthcare thing.
Drew, thank you so much. Drew Armstrong there, Bloomberg News senior editor for healthcare, joining us today on this big news on Amazon and pharmacies in the U.S. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Thanks, Francine. President-elect Joe Biden says containing the coronavirus pandemic is vital to the economic recovery. He's vowing to spur a rebound in 2021, but also urging Congress to pass a stimulus bill this year to deliver immediate relief to Americans. Biden says it should be like the $2.2 trillion HEROES Act already passed by the House. The general outline of a future trade deal between the UK and the EU is clear to both sides. That's according to Ireland's Prime Minister. But he's warning it's not yet clear if his UK counterpart Boris Johnson truly wants an agreement. The UK says it wants to see realism on the part of the EU in the talks. Flexible working could be the solution for businesses struggling to recruit women into senior roles. That's according to a new study by Zurich Insurance. Women applying for management jobs jumped 20% after the insurer advertised the roles with part-time and job share options. As a result, the number of women hired for senior positions jumped by a third. And the strongest storm of hurricane season has hit Central America. It made landfall late Monday in Nicaragua, bringing catastrophic winds and torrential rain. Now 105 miles per hour, its winds are powerful enough to cause deadly mudslides and trigger a humanitarian crisis. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Francine.
Ritika, thanks so much. As we spoke to Kevin Cirilli of Pennsylvania, our chief Washington correspondent, we got a nice briefing on the tension that's out there. Now, with any congressman, there's like 14 ways to go. But with Brendan Boyle, it is different. His father was immigrant from Ireland. He started out with the most basic of family upbringings in the Philadelphia area and has really made something of it. He is a gentleman from the 2nd District of Pennsylvania. We're thrilled that the moderate Boyle could join us this morning. Brendan Boyle, I want you to explain right now to our international audience the threat of the majority that Speaker Pelosi and you face by the left. How afraid are you that with action over the next 2 years, Congress could be tossed to the Republicans?
Yeah, well, thanks. It's good to join you even at this ungodly early hour.
Got that right.
I give you credit doing this every day. Let me say, I'm certainly not afraid. Look, I think that for any political party to reach a majority, to get to the magic number of 218, it's going to require a certain amount of ideological diversity. Certainly, I saw that when the Republicans were in the majority, and now we see it that we've been in the majority. I've served in both. And I will tell you that over the first 2 years of our majority, we didn't lose one vote on the House floor. So I think actually the last 2 years speak for themselves, are pretty good. Now, the one difference moving forward is obviously our majority is reduced. We're still in the majority, but it's a smaller number than it was 2 years ago. That said, though, I have previously served in the state legislature in a majority that was razor thin.
Yeah.
And one of the things that you saw is that there was a little bit more camaraderie and the idea that no person could be a free agent, that we all needed to stick together. So oddly enough, in some ways, when you have a very close majority, it actually does improve the solidarity and the teamwork as opposed to when you have some slack.
You're in Philadelphia, and I know, Congressman, you read Ed Rendell's, first Bible book of politics as well. In the trenches of Philadelphia politics, what happens every time somebody on the left says defund the police? Is that way overplayed by the media, or is that really harmful to Brendan Boyle and Connor Lamb moving Pennsylvania forward as a Democratic majority?
Yeah, so let's be clear. The reality is as you know, there are almost no Democratic elected officials who favor, quote unquote, defund the police or abolish the police. I will say that the Republican campaign to link us to that slogan had some effect in this past election. I mean, I represent and live in an area of Northeast Philadelphia that has about 5,000 Philadelphia police officers. Obviously, a slogan of abolish the police or defund the police doesn't exactly help us with them and their families. Now, Was that the only factor at play in the election? No. Sometimes when you look at post-election analysis, people quickly attempt to find one magic bullet solution when, you know, in reality, the answer to what happens in most campaigns tends to be complex.
Congressman, good morning. The fact that Donald Trump still hasn't conceded the election, what does that mean? Does it make it more sympathetic to the Democrats, or do actually, people in the U.S. believe President Trump?
No, I mean, let's be clear. Joe Biden at this point has won 5 million more votes. He's up by about 4 percentage points and 306 electoral college votes. Even if somehow magically the results changed in a couple states, even if it had changed in 3 states, Joe Biden would still be the president-elect of the United States. What it does show, though, is I'm actually not surprised. I mean, Donald Trump has thought every election of the last decade was fixed, including 2016, the election he won. So actually, it would have been a surprise had he conceded and just admitted that this election was legitimate.
Congressman, how do you, renew and rekindle with a lot of voters? So we found out today that Amazon was launching this pharmacy online in the U.S. Do you worry about big tech coming in and actually, closing down a lot of your stores in your state?
Yeah, I think this is a major systemic question that we have to face in our economy. And that is, especially during the pandemic, the big guys have gotten bigger. And the small guys on Main Street are either not open or permanently put out of business. And I think for all of us, just as consumers, we face this as well, because I use Amazon. It's easy, it's convenient. But then the reality is that Amazon has the power of monopoly. And moving forward, if they are in every business and have that monopoly power, what does that say about a free market, about our system? Do we really have one at that point if everything is controlled by Amazon? So I think that these are serious questions that we need to confront. And that certainly when it comes to antitrust, Washington, D.C. needs to be more active.
Oh, Brendan, let me go there. I think it's important. And yes, it's not Philadelphia. It's maybe Western Pennsylvania over to Cleveland of long ago and fire away, think Ida Tarbell. But it is Standard Oil. I mean, that's basically what we're talking about is a Standard Oil model. Would you suggest that Mr. Biden as president will lead us toward a regulatory milieu that gets us to Standard Oil actions on stocks like Amazon, companies like Amazon?
Yeah, I wouldn't suggest it, but I think the Justice Department needs to take a firmer look at a number of these areas where the power of monopoly is growing. Ultimately, despite the convenience of an Amazon app, monopoly is not good for our free market. It's not good for consumers. And that is something that I think we need to take a less of a laissez-faire look at.
Brendan, what are you going to do about the Philadelphia Eagles? I got 10 seconds. What are you going to do about the Philadelphia Eagles? Fix it.
3-5-1 is a disgrace. Even more of a disgrace is that we are still in first place in the NFC East. I apologize to the rest of the nation for the state of the NFC East.
Very good. Your apologies accepted. Brendan Boyle, thank you so much. The 2nd Congressional District of Pennsylvania. Later today, driving the conversation forward, the Senator from Tennessee, Marsha Blackburn, with us. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Surveillance, really interesting show today. Lots of good conversation here across what we do, economics, all that investment stuff. The bigger picture as well, the congressman from Philadelphia that we spoke to, Mr. Boyle, moments ago. And now, while we dive into a research note, he is at Barings, where he is chief global strategist. Christopher Smart is acclaimed for thoughtful notes. He can take a cliche and make it smarter. And he does that with the idea of darker tunnel, and there's a brighter light out there. Christopher Smart joins us this morning. Christopher, thank you so much, and I thought the note was wonderful. Let me start with the darker tunnel. How dark is it?
We're learning every day it's getting darker in terms of the coronavirus cases we're seeing really across the country, in Europe as well. And more worrying from an economic point of view are the decisions that are being forced upon mayors and governors to go back to their playbook from March and April, restricting business activities, restricting movements, closing restaurants and stores, that sort of thing. That, I think, is something we weren't expecting about a month ago and makes the winter look that much more challenging.
Right.
And, we'll get a retail sales number later this morning, but what we really want to know is what the retail sales number is going to look like in December.
Our theme this morning, and with John Norman of J.P. Morgan as well, has been just on simple aggregate demand is not there. Can government institutions manage an increase in aggregate demand, or is it just about income replacement and substitution?
I think they can do both, and I think that's what we've seen in history, and that's what we saw actually earlier this year, where there was not just income replacement, but people who were at home without jobs were still spending, and which was very helpful to keep the economy moving. And that's the big question mark, again, going into the winter, is not just the rising coronavirus cases, but when will a stimulus bill get through Congress? How large will it be? And how much damage will have been done by the time it gets out the door and into people's pockets.
Christopher, good morning. I'm jealous of your library. That's a good library you have behind you. When you look at some of the contradictory news that basically the markets have to digest, is now more difficult because it's contradictory news, but that really goes to what kind of recovery we'll see.
And I think that's the struggle that investors are facing right now. This near-term news is unexpectedly darker than we had thought about, as I say, a month ago. But what we're also getting right now is confirmation that the vaccines are coming. Not just the two that have been announced, but others will be on the way. Their effectiveness is higher than expected. There is a distribution plan coming into view. It's not going to be all at once, and there'll be some bumps along the way, clearly. But there is a sense that there is a bright light on the other end of the tunnel. We're just still not clear how dark the tunnel is going to be between now and when we get there.
Yeah, what happens to treasuries in the meantime?
Well, you're seeing the markets kind of play out that bifurcation, right? The stock market is pricing in the light, and as usual, the Treasury market is more concerned with the darkness between now and then. And I should say, once we even get through to the other side, we're going to be a global economy that has been scarred by this experience. There will be, weaker balance sheets, a labor market that is
I closed position on Japanese yen, 104.260.
Will be behind us, but we'll still be facing all of those slow growth issues that we had coming into the pandemic.
Christopher, the heart of this is we will manage the method and we will struggle. The institutions, the elites will struggle. The haves will struggle to have smooth reaction functions. And then there's China. How does China play into this? Do they want us to have smooth reaction functions, or are they going to go their own way? And do we look for instabilities because of China?
I think China, at a base level, wants to see the global economy grow because that benefits the Chinese economy. And so I think they're probably rooting for us to succeed and get out of this pandemic as quickly as possible. Having said that, you know, the relationship between the U.S. and China has been deteriorating for several years now. It's not just Donald Trump. It's not just trade. There are issues across the board around North Korea, around Taiwan, around Hong Kong that are going to make the relationship much more complicated going forward. And I think that is going to, at some point, come back into what markets are going to be looking at. Not right away. I think Joe Biden will come in with a fresh start, but very quickly, I think those issues are going to be back on the table.
Christopher, what do you make of Russia? And actually, it seems that investors have so much appetite for green investing and sustainability at the moment that if Vladimir Putin doesn't focus, at least at the margins, on climate change, investors could severely punish Russia because of it.
I think it's, you know, that's clearly part of Russia's problem in terms of its environmental, social, and governance issues, but it's not just the environmental issues that hurt its ESG scores. I think, you know, investors are going to be looking at that, but it's part of a broader struggle that investors are facing in terms of how much do they invest in oil, carbon-based energy versus renewables. I think with the U.S. Now very focused on a new climate agenda, that's going to nudge investors across the board to look at how there will be more incentives to shift to a greener economy. And Russia is part of that puzzle, but not the only part.
Christopher Smart, thank you so much. Barings Chief Global Strategist and Global Head of Barings Investment Institute. Now, coming up, we continue tracking COVID-19 and the pandemic. Up next, Amish Adalja at Johns Hopkins Center for Health Security Senior Scholar. This is Bloomberg.